Good morning, everybody. Welcome back to another episode of the Market Open. It is Thursday, July 31st. We are live. Thank you, everybody, for being here. Past 24 hours has been kind of wild in regard to the earnings that we got from three major companies, Robinhood, Meta, and Microsoft. There is a lot to dive into when it comes to Microsoft and Meta. I'm kind of at a loss for words when it comes to their earnings. I think everyone at this point is a loss for words when it comes to those two companies. And given yesterday where I was, I didn't have that much time to dive deep, but I got home late last night around 12 a.m. and I went through their earnings, at least on a surface level. And it is proving we are living in a different type of world. And so we're going to be looking at a lot of different perspectives here today when it comes to Microsoft and Meta in terms of what they showed off, what they were able to do against street expectations, how they guided for Q3 in regards to CapEx, which is why NVIDIA hit all-time highs last night. And we are going to see how the street treats those companies this morning. Of course, there you go. Good morning, chat. I'm at a loss for words. Let me talk. Thank you for being here, Chad. Thank you all for being here. We got to make sure we start off the morning with a nice coffee roast of a mitt, right? There you go. I'm at a loss for words. Let me talk about it. Speaking of statements that can contradict each other, yes, we did it, folks. We did it, folks. We had to do it. Yesterday, we were at the Robinhood event, and we had to hit them with a currently right now. For those that missed it, here was the moment. I'll talk about the entire experience after this, but this was pretty cool yesterday. Robinhood Q2 2025 earnings.
Let's take a question from one of our finance content creators, Amit from Amit is Investing.
All right.
Vlad, Jason.
Finance content creator. Good to see you.
Congrats on a great quarter and congrats on innovating on the live event experience for earnings. Currently, right now, you guys have about...
I had to. You know I had to. And it was a game time decision. Literally, I think 30 seconds before I raised my hand for the question, I had my question about gold subscribers and cyclicality. And then I was like, wait a second. This question has to do it. Like, I'm here. I'm alive in this moment, in this state of time. If I don't do it, when am I going to do it? And so I had to do it. I just had to. But I'm glad that you guys enjoyed it.
Live event experience for earnings. Currently, right now, you guys have about 3.
I made sure to put the emphasis too. I made sure to do a pause so everyone knew that you guys knew what I was doing, because only you guys knew and I knew. Vlad doesn't know about currently right now. Robin does. This was a community thing because I was like, we're gonna know, and that's why I think it was special and hilarious at the same time. But we had to do it.
Experience for earnings. Currently, right now, you guys have about 3.5 million gold subscribers, which seems to be the least cyclical part of the business because it's reoccurring SaaS revenues on that yearly subscription. More broadly, how are you guys thinking of protecting the business from cyclicality in the face of market volatility, rate cuts leading to a loss of net interest income, and anything else that could keep that type of growth going as sustainable as possible, given one of the biggest criticisms I've heard is that Robinhood is a very cyclical business?
It was fun, man. It was really, really fun. It was super cool. So that's what I was doing yesterday. I wanted to keep it a surprise, and I wanted to not tell everybody that that's what I was doing because I thought it would be really cool for you guys to. And not many people guessed it. I mean, I think when I left the earnings call at 4:30, I saw the chat. I think a couple of people like, oh, he's probably at the Robinhood earnings, but the majority of you thought I was like interviewing someone or I was going to be at the CNBC or Bloomberg. So I think we kept it as a good surprise. And dude, I love surprises. My mom grew up like always surprising me with like birthday stuff. So I have surprises built into my DNA. I just love doing surprises, and I'm happy that you guys enjoyed it, dude. It was a really cool experience. It was fun. I don't think retail has ever been invited to an earnings call the way that Robinhood did it. So shout out to them for really innovating in the space. It was a special moment. It was a good opportunity. Unfortunately, a lot of the analysts actually canceled because they had so many calls. So that's why it was only like 30 people in the room. And there's only like, I think 4 to 5 analysts, including myself, that actually asked the question in person. The rest were on audio. So I think it would have been larger if they had a lot more people, but it's just peak earnings season. So it's hard for them for all the analysts to like come in one spot. But it was cool. It was super special. I'll talk more about it later. I had a dinner last night. So I said I would explain what happened last night. I had a dinner last night with someone who works at Altimeter Capital, Brad Gerstner's fund. Brad Gerstner, as you guys know, made a very significant investment in Robinhood in November or in April. And they made a $200 million investment, roundabout, I think about 2 million shares, and at like 30, 45 bucks. That was their price. One of the reasons they obviously they believe in Robinhood and believe in the mission, but the head research analyst that helped Brad pull the trigger on that decision ended up consuming some of my content on Robinhood. And that's why they wanted to meet and have a discussion. So at the end of the stream, I will talk about how that dinner went, because talking to someone who is a professional money manager that works underneath Brad Gerstner, who has one of the best brands when it comes to money management, was really cool. Understanding how they thought about Robinhood, how they pulled the trigger. The TLDR, I'll get into it like in 2 hours at the end of the market open. But the TLDR is they're just like us. They're literally just like us. They read the news, they try to come up with a thesis, they have to pitch their investors, and then boom, they make a decision. So there really is not that much of a difference outside of the amount of capital they're working with. But that's what I did last night, and we'll talk more about it. So it was all based on Robinhood, and their insights on Robinhood as well were super, super cool and fun. And they were also really happy that Robinhood innovated on the live earnings experience, which is what we got to take part of yesterday. So yeah, it was super fun. I will talk more about it at the end of the stream. We got a lot of earnings and a lot of news to dive into. We got Basent talking right here. Trump says he has a deal with South Korea with some tariffs. So we'll talk more about that. The one thing I do want to say real quick before we get into everything, I deeply, 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 deeply appreciate the love and support on that milestone at the earnings call. While I was asking my question, I had the chat open on my laptop because I just have to see everyone's reaction. And it was like the amount of love. I don't even know what to explain. Like I don't even know how to explain or express the gratitude. The fact that people were happy for me as an individual to be able to get that moment and opportunity in my career, which is obviously a big deal for me. But to me, you know, that it's a big deal for the community. It's a big deal for all of us, right? And that's why that CRN had to be pulled out at that moment. We'll talk about Robinhood's price action as well. I know that's annoying a lot of people, and so we'll talk about it and we'll go deeper into their earnings. They absolutely demolished earnings, and we'll discuss that. But it was a big deal for me. I think it was a big deal for the entire community. It was a big deal for retail investors. The only reason that lady from Altimeter wanted to meet with me and have dinner is because she could not believe how retail investors have become so sophisticated to be able to find all these different names that have formed these different communities and cults of crowdsourcing DD. She comes from a totally different world. She works with hedge funds and investment managers, and she just wanted to learn, like, how did retail find Robinhood at $8? They found it at 40. Right now, it's been a great investment for them, but why did retail find it at 8, and why did institutions find it on a 5x after it was $8? And so I think the fact that all of us are together every single day forming this community, and then getting to have certain milestones in this community, like a currently right now moment in front of Vlad, that was really cool. It was really, really, really special. So yeah, again, from the bottom of my heart, very, very appreciative for everyone who just felt the love of the moment and wanted to communicate it. I know that a bunch of people sent a bunch of super chats as soon as they saw me on the screen, and I just think it was a big win for retail, a big win for the community, a big win for this specific community. And then we had to hit them with the CRN. We had to hit them with the CRN. Like, it's just like, it was literally a game time decision. I was like, I can either say this or not say this. And I was like, if I do say this, I know that you guys are going to be like, this guy did not just say that, especially with the watch that doesn't have the time. It's like, this guy did not just do that with the AirPods and the hat when you got all these suits. I'm like, no, this is what we're doing. This is what we're doing. And so we did it. And so deeply, deeply appreciate everyone with love and support. It is overwhelming on Twitter, the amount of people that screenshotted the video and posted the pictures, but it was very, very humbling, and it was awesome. Did you get to meet Vlad? Yes, I talked with Vlad for 30 minutes roundabout after the event. Again, I will talk about everything that happened at the event at the end of the stream, because there's a lot to talk about and I want to get into all the news. But let's just say Vlad is really enjoying the progress they're making, and I got to talk about him about a lot of different topics. He told me about what it was like meeting Trump, and so it was really, really cool, and he's pretty happy with their execution. And I think the execution is not stopping. I think it is not stopping at all. Maritza, thank you for the $10 super chat. It was so great to see you asking the question. First earnings call, I know the person asking this is priceless. I showed my daughter and husband, and all they cared about was that you had a Knicks hat. See, I love it. That's the stuff that makes it priceless for me. The fact that you showed your family, and your family just cares about the Knicks hat. I have to wear the Knicks hat in New York, so we have to do the Knicks hat. But yeah, that's awesome. Thank you so much. It means the world. And yeah, thank you for participating in this entire journey. Lope, thank you for the 15. As a finance content creator, starting the sentence with currently right now was hilarious. Thank you for the content. Thank you for being here. Thank you for being here. It is It means the absolute world to me. All right, folks, let's get into it. We got a lot to discuss. We'll talk about Hood in a second, but I think we got to start off with Microsoft and Meta. I think we have to start off with Microsoft and Meta because it is going to set up a macro argument. We will also talk about Grab, TLDR. They smashed. I don't know what the stock's going to do, but I have not seen a single shareholder based on the tweets that I've read over the past 24 hours that is upset with those earnings because those earnings were phenomenal. And I think the market in time will eventually respect those earnings and give it the multiple. I think they need to increase their EBITDA guidance. They didn't do that. I was right about that. I think they'll do that in Q3. They didn't do it in Q2, just like last year. I listened to the call last night. I got home at like 12 a.m. last night, but I still listened to the call because I had to. And I was very, very impressed. And I'm buying more shares if we get a massive dip because this is going to be a company that I believe just fundamentally compounds. So we'll talk more about that later as well. But Meta and Microsoft set up what is actually happening in this market. Roblox crushed earnings this morning as well. We'll talk about that. And that's what I want to start with. Also, real quick, by the way, got to meet Derek last night. Got to meet Derek. Those who know him, he's an OG of the channel. He's a very good friend of mine. He got me into Figure at a Series B valuation at $2 billion. Humanoid robotic startup, which, by the way, Brett Adcock, CEO of Figure, posted a video of the robot doing laundry in his house near his kids. We're going to watch that video, and these robots are becoming a little bit more real than we thought. And now the company's worth $40 billion. So he was in New York City. He had some business. And so after the dinner, got to meet him and got to talk. And it was super awesome. Super, super awesome. So shout out to Derek. He will be at the Miami meetup. He will be so whoever's going to Miami, he will be there in the Miami meetup. And it will be very cool for you guys to be able to meet him as well. All right. So Meta, Microsoft. What the heck did we just see, guys? What did we just see? They beat EPS by $2. They beat revenue by $3 billion. Are you kidding me? Are you actually kidding me? Like, I couldn't believe it last night on the stream when we saw the numbers. And then I came back home and I looked at the numbers actually. And I was like, Azure's growing 39%. That's not their top line revenue. That's one part of their business, which is the most important part, cloud computing, 39%. I mean, Meta is being Zuck started, we'll listen to a little bit of the earnings call, but Zuck started the earnings call was saying, basically, let me translate for what the politically correct statement is what he said on the earnings call. He said, hey, guys, you have no effing clue what's going to happen with super intelligence. The reason I'm spending billions of dollars on talent is because everything is changing. That's why Palantir's at 160 in the pre-markets, because when people see Microsoft cloud computing growth and they see Meta AI growth, they say, wait a second, Palantir's enterprise AI SaaS, that is also going to get a bid based on all this momentum. Zuck's basically said, you guys don't get it. You guys don't get it. Super intelligence is going to happen. It will change everything. Microsoft put out a report last night about the 40 jobs that will be taken away because of AI. Like, this is real. This is very real. EPS on Microsoft, they beat by 8%. Revenue, they beat by $4 billion or $3 billion. I believe, if I'm not wrong, they're a $4.2 trillion company in the pre-markets. They added $400 billion of market cap is what Microsoft added overnight. Now, we're going to see if this can sustain itself because I have some thoughts on seeing, can this actually maintain the momentum? But if we take the number of shares, they're up by $45 times their outstanding shares. Yeah, 350 billion. They're up 350 billion overnight because of the market cap. Meta is basically a $2 trillion company right here, being up 11%. These are multi-trillion dollar companies being able to move hundreds of billions of dollars based on these earnings. And then Palantir is at all-time highs in the pre-market, 160.65. Again, I really think it's catching a bid based on the cloud computing growth from Microsoft. Because again, if a lot of companies are paying for cloud computing, that means they're obviously, especially AI workloads on that cloud compute, that means they're running software that is utilizing AI. What company delivers software that utilizes AI? Palantir. And so I think that's how the market is interpreting that for Palantir. And then NVIDIA, which was at 185 last night. Right now it's at 183. NVIDIA, I do not own Microsoft. I do not own Meta, but I do own a pretty sizable chunk in my portfolio of NVIDIA. And so the fact that NVIDIA got a sympathy bid because of Meta and Microsoft and the guidance and what the CEO said, the CFO said, is incredible. AMD as well. I mean, the street's just piling into the semis because they're like, wait a second, Microsoft said we're going to increase CapEx in 2026, and so did Meta. You thought there was this, you remember this whole narrative that CNBC, some of these analysts were touting this digestion phase? I mean, I guess they're going to keep eating because the digestion is not happening yet. They are ready to keep spending on CapEx. So what does this mean for the broader market? If you are an investor, even if you do not own Meta or Microsoft, which I don't. I think we have all, this is what it actually means. It means it's actually 10 p.m. at the party. Dan Ives was right. It is actually 10 p.m. at the party. It was 9 p.m. a year ago. It's now 10 p.m. I mean, I don't know if it's 1 a.m. or 2 a.m. yet. If the party ends at 4 a.m., it seems like based on these numbers, it's 10 p.m. because the ROI that the street has been looking for the past 2 years is here. It's happening. It's real. It's taking place. And to think about it in the context of the market, if Meta and Microsoft are putting up these numbers and are going to and are basically telling investors, this is not the peak, this is nowhere near the peak. Well, wait a second. If Meta and Microsoft are going to be spending more money, are going to be getting more ROI, are spending billions of talent and GPUs that they can't even, they don't even have enough supply to buy GPUs. We'll listen to Microsoft's earnings call in a second because it was crazy. The CFO was like, hey, we don't have enough. We want to spend more, but NVIDIA doesn't have enough to give it to us. That means I think this really is just getting started. And what does that mean for the market? Well, we are entering into August. Oracle all-time highs in the pre-market. August tends to be a dump. August tends to be a dump. And because August tends to be a dump, I don't know if Microsoft and Meta will be able to hold on to this insane 10% rally they're having in the pre-market. By the way, that's also, I think, Robinhood's kind of flat because we're heading into August. Robinhood had a great earnings, but August tends to be a dump. So maybe Robinhood's just like even holding on to 105 is good for Robinhood. If Microsoft and Meta somehow convince the market that historical seasonal weakness shouldn't exist because of those earnings, and they're actually able to maintain an 8 to 10% move, which again is hundreds of billions of dollars in market cap, that means the street is saying, screw interest rates, screw inflation, and screw historical weakness in August. These companies are real, and we need to have more allocation. And when we look at all the price targets that we got today, all of them, Meta got upgraded to $1,000, Microsoft got upgraded to almost $700. I mean, like everyone on the streets just like, what do we do other than upgrade these guys? Like, what do we do? These are the winners. These are the winners. So for anyone who thought they were crazy over the past 2 years buying the Mac 7, even though you saw all these analysts say rotate to small caps and this and that, it's like, no, the Mac 7 or the Mac 7. Now you have to be picky in the Mac 7. Apple and Tesla have not really been the best picks. Google, by the way, this Meta call is a big middle finger to Google, not because Zucks has anything against Google, but it's almost like it's more of a street giving a middle finger to Google saying, hey, we don't believe in your AI vision at all. We believe in Zucks. We don't believe in you. And I don't think the street should feel like this, but the fact that Google's red and Meta, Microsoft, and NVIDIA are up is very weird. And to me, the only thing I can interpret is the street saying, yeah, Google, we like your AI, but we don't really love your AI. But Meta, we love is that we'll let Meta spend as many billions of dollars as he wants on different people. He can spend $10 billion on one person. We're going to give him more capital because we believe in him. But for Google, it's just, I don't know. We'll talk more about Google, but it's very weird. So obviously you have to be selective in terms of the Mac 7, but the Mac 7 has been the trade. The QQQ, the NASDAQ has been the trade. And as a result, I think just like a top line overview to think about what's happening in the investing community, Meta and Microsoft, I think just saved the market because earnings have been good. Earnings have not been phenomenal. Meta and Microsoft were beyond phenomenal. If Amazon and Apple can deliver, which I think Amazon will, Apple, who knows, then I think you have a lot of leeway, even if some of these other companies have some consumer issues, tariff issues, which we've seen in isolated instances, because the broader AI trade cannot be ignored. Oracle cannot be ignored. Meta cannot be ignored. Microsoft cannot be ignored. SMCI cannot be ignored because if Meta says we're going to be spending more on CapEx, boom, you need more NVIDIA, you need more GPUs, you need more servers for those GPUs. Micron cannot be ignored. I mean, like AMD cannot be ignored. Meta has a very good relationship with AMD. They buy a lot of their chips. Google also cannot be ignored, although the market is giving them a middle finger in the face of these earnings. But like Palantir cannot be ignored. Tesla cannot be ignored. By the way, robo-taxis, they're live in the Bay Area. Elon tweeted last night, they're live in the Bay Area. Now, they're not really robo-taxis because you have to have someone with you in the car, but you get the point, right? They're beginning to expand it. It's not like officially Waymo's in San Francisco yet, but this is happening. This is happening. This is so real, and it is incredible to see how it's playing out. This is about a minute of Zucks talking about this AI revolution last night on the call, and listen to the urgency in his voice when it comes to how the world is changing.
Is very optimistic. And I think it's one of the interesting challenges in running a business like this now is there's just a very high chance, it seems, like the world is going to look pretty different in a few years from now. And on the one hand, there are all these things that we can do. There are improvements to our core products that exist. And then I think we have this principle that that we believe in across the company, which we tell people, take superintelligence seriously. And the basic principle is this idea that that we think that this is going to really shape all of our systems sooner rather than later, not necessarily on the trajectory of a quarter or two, but on the trajectory of a few years. And I think that that's just going to change a lot of the assumptions around how different things work across the company. So anyway, I think it's basically just we're continually observing how this works.
And he goes deeper into saying this is why we're spending so much on the superintelligence efforts. This is Microsoft CFO talking about CapEx yesterday.
Contracted on the books business that we need to deliver, and we need the teams to execute at their very best to get the capacity in place as quickly and as effectively as they can. And so when you look, and we've talked about the growth rate will decline year over year, but at its core, our investments, particularly in short-lived assets like servers, GPUs, CPUs, networking, storage, is just really correlated to the backlog we see and the curve of demand. And, I talked about it, in January and said I thought we'd be in better supply-demand shape by June. And now I'm saying I hope I'm in better shape by December. And that's not because we slowed CapEx, even with accelerating the spend and trying to pull leases in and get CPUs and GPUs in the system as quickly as we can, we are still seeing demand improve. And so
I mean, like, are you kidding me? She said in January, I thought we'd be okay for by June in terms of our understanding of CapEx. Remember, Nadella had that famous interview with Ross Sorkin, he was like, "Are you good for your 80 billion?" And he was like, "I'm good for my 80 billion." Now it's like they don't know what they're good for because they need more. They need more. They need more GPUs. They need more servers. They need more everything. And the reason they need more is not because they just want to have data centers, is because they have so much demand for cloud, for Azure, that they need the computing infrastructure to be able to serve that demand. What does that demand look like? It looks like this headline from the information that came off last night. OpenAI hits 12 billion in annualized revenue. They're doing $1 billion per month, not profitable yet, but they're doing $1 billion a month in revenue. They broke 700 million weekly, not monthly, weekly ChatGPT users. OpenAI and ChatGPT is just the first iteration of what LLMs look like. This is going to be a different world when things actually expand off broader use cases of just the LLM in a chatbot. And I think that's what the market is preparing for. And that's why everyone is so excited. So my takeaway, we'll have Jose on later and we'll get a perspective from him in the context of what this means for semiconductors. But by the way, this is the Bay Area geofence for Tesla. Pretty incredible. There's some videos of people that already got into Tesla, so I'll share those later as well. But the fact that they're moving this fast is amazing. I think the takeaway for investors is, wait a second, this is not slowing down. This is not slowing down. I'm not saying you can't be bearish in certain moments. I'm not saying like, hey, there's macro stuff we have to worry. Like, of course, all that stuff matters, and we will cover that every day. But for the people that said this is not real, that AI is not real, that it's not happening, that all that money is worthless, that the spend makes no sense. I mean, Meta and Microsoft just said you're wrong. And they said you're wrong, not by just saying we're going to spend more money and just wait in the future for us to get results. They showed the results. Their companies increased by hundreds of billions of dollars in market cap. And they are continuing to make sure the spend doesn't stop because they've realized the opportunity is so large. It just feels like this is the greatest opportunity to be an investor in history. And I don't think that's super euphoric because Meta and Microsoft, after those earnings, I haven't really gone through all the numbers, but are they still super expensive? Are they 2021 type of expensive? No, I don't think so, because all the earnings estimates have to change. And so the reason I'm being so aggressive here and adamant about this is because it's not to say we're not going to have dips and volatility. Who knows if Microsoft and Meta even hold their pump? Because quite frankly, I think August volatility could be a real thing. And it could just be, it could be something where people sell into today if they've been waiting on Meta and Microsoft to finally make a move. But the earnings can't lie. The numbers can't lie. And once we see the inflection of those earnings across every company, not just big tech, because theoretically every company should benefit from AI, that's when I think this market can continue to go even higher. So it is a revolution. It's happening right now. You got to pick your horses in this revolution, but it is absolutely incredible to kind of see how this is all playing out. And it's amazing to watch these companies unfold in front of us. All of us are living through the biggest technological revolution in history. All of us, no matter how old you are, it's happening. And it's amazing to even have a chance to invest in this stuff. So we'll talk more about it later and go even deeper into Microsoft and Meta, but those were the results that we got from them. Hoodie, we'll talk more about Hoodie as well later, but top line results on Hoodie, they crushed it. They crushed it. We will talk about Grab as well. We got the market open in about 20 minutes, and then we'll get into all the other stocks and headlines. We had a bunch of earnings this morning. We had a lot of stuff to get to. So we have Devin Ryan coming on at 10:30. He's a Robinhood analyst. We have Jose coming on at 10:50. Kris coming on later in the show. So we will get to a bunch of different things. $989 million in revenues. They basically gave you $1 billion again. Robinhood does $1 billion. 42 cents of EPS. Analysts thought they would barely do 35 cents. I mean, you're talking about a massive beat on EPS, growing 100% year over year. You have net deposits at 14 billion, which is incredible. You had AUC at 279, 3.5 million gold subscribers. They bought back 3 million shares at 41. Shout out to Jason Warnick, the CFO, because he he said, hey, we're buying the tariff dip. And they have $151 average revenue per user, up 34% year over year. It is incredible. It is incredible. Yes, we do have the Figma IPO this morning as well. It's going to be at 12 p.m.ish. I'll probably be live till 12 p.m. So we'll try to see it go public. I'm not that excited for it because I'm not going to get any shares. I don't think, like, guys, it is oversubscribed. I mean, we even asked Vlad about it. We were like, yo, so what do you think about the Figma IPO? And he was like, it is so oversubscribed. It was like, we got whatever allocation that we could get, but like, we just don't know how many shares we're going to be able to give out to people because it's so oversubscribed on Robinhood. So Robinhood is the brokerage I use to try to allocate these shares. I requested 75. I doubt I'm going to get one share. I mean, this stuff it's a pure lottery mechanism. And if I do get one share, it's like, okay, cool. But like, there's no way I'm going to be able to, really build a position today. So we will cover that when it happens. I think that IPO is going to double in a day and we're going to see how much momentum is there. But overall, it is very, very exciting in this market to kind of see these new companies take place and do what they have to do. SoFi Mizuho raises them to 26. Not bad. That's Dan Dolev. Raises them to 26. We'll talk more about SoFi as well. By the way, SoFi in the pre-market is doing its thing, trying to get back to 23. So investors are kind of saying, all right, we don't really care that much about dilution, which is a good thing. And that's moving on. I think Vlad is on a mission. There's a lot of other stats in earnings that are pretty incredible that we'll talk about. 600,000 international customers, 1 billion prediction market contracts. You just have tons of different things. Credit cards are now above 300,000 users. Like, banking's coming in September. I think I'm just going to put it out there. I've already basically said it, but I think we're going to 120 by end of year. I think we are going to 120 by end of year. By the way, Paramount is going to get out of the S&P 500 on August 7th because of the merger with Skydance. So if that does happen, I'm not sure if that's confirmed to happen, but that's what I've been reading, that August 7th, they're going to get out. There will be another spot open. After these earnings, if the S&P 500 on August 7th decides that they're not going to put in Robinhood, at that point to me, I'm like, okay, it's political. Like at this point, it's either Robinhood or AppLovin. If they go with AppLovin, I get it. That's fine. If they go with anyone else besides AppLovin, it's political. And so I don't know what more they have to do to get to get valued by the S&P 500. But I think we're going to 120, dude. You do not see those earnings and say they don't have the ability to continue pushing and executing. My question, which hopefully you guys enjoyed that question, but it's also a question that I deeply care about, is, hey, all the bears on Twitter that are selling Substack subscriptions and that are tagging me in their short thesis because they want me to respond to it because then they'll get more attention so that they can sell their Substack subscription. They're telling me that Robinhood is the most cyclical business and the stock's going back to like 35 when we get into a little bit of a bear market. So my question was, hey, what's your response to that? Like, what happens? Like, how do you protect the business against cyclicality? And I think Vlad and Jason gave a phenomenal answer. And they basically they gave a nice little middle finger to the shorts, writing those theses that say, oh, if the market falls, Robinhood falls. It's like, first of all, obviously, yeah, if the market falls, everything falls. So it's not really a short thesis because then you could just be short the entire market. So it's not really original. But second of all, they clearly identify the different levers they can pull of the business to make sure that in the face of market volatility, because of their operating leverage, 40 cents on every dollar is profit, they will be able to manage whatever market condition exists. And I think you got to give management the ability to say, yeah, dude, like 4 years ago, they were a crappy brokerage that was a meme stock app that could not manage interest rates going up. They were a ZIRP phenomena, zero interest rate phenomena. Now they've become a $100 billion company while rates are the highest they've ever been in 40 years. And so the respect and trust I have on this management team, the fact that they bought 3 million shares at $41 to me as well, just shows how good they are at capital allocation. And as a result, I think they absolutely crushed it. And, if we do get some egregious dip, I will buy more, but I don't think the stock has to go back to 90 by any sense of the imagination. They got a price target today by Devin Ryan. We'll talk more to him when he comes at 10:50 for $130. I believe that's a street high price target. And he says, hey, we're going to use a 35 times EV to EBITDA multiple for 2026. We upgraded our EPS estimates. But given the scalability of its operating model, Robinhood's ability to deliver UI and UX that customers love, combined with 27 million customers and growing, we believe the company continues to take market share in existing businesses with increasing margin, and they have a powerful flywheel that's gaining steam based on their pricing and value proposition to customers. This was Vlad this morning talking about their earnings growth.
Well, strong quarter, obviously, from the financials all the way through to sort of like leading indicators. Customers seem happy for now. They're putting more money into the platform, using more of our products. I think that's translating to these great business results.
I like that you still say for now because you're worried.
We always have to be paranoid.
So what are you paranoid about?
Well, I think it's just a great man once said, customers are always dissatisfied, and there's ways that they're going to let you know if you could be doing things better. So
how much, though, is this about the competition right now for you versus just the operations of the business itself?
I think that, we're actually, if you look at what's happened thus far, customers are incredibly happy with our products. The net promoter scores that we look at are at multi-year highs, I think a 4-year high. Net deposits, incredibly strong. We had record quarter for pretty much every asset, equities, options, cryptos at a 6-month high. And I think it's all about how to make sure we keep up the velocity, make the service better while keeping costs in check. I think that's why we've been doing so well.
When you guys sit around on a Monday morning and think about your competitor set today, what does that even look like?
We actually surprisingly don't spend a lot of time thinking about competitors. I think when they do something new and interesting, we sort of like learn from that. Right. But on a regular basis, it's really looking at our own business and asking ourselves, what are the fundamental ways we can be serving customers better? How can we grow faster? What are the new products that we think
Who's doing something interesting on that list right now? Is there anybody? I don't know if that would be your whiteboard.
Well, I think Robinhood's doing a lot of interesting things. Obviously, you've got some incumbents and you have
He went on to say Coinbase is interesting, but he got that question as well yesterday about like, hey, who's doing interesting stuff from a competitive perspective? And he was like, we are. It's like, we are. We're the ones that are pushing this stuff forward. Not to mention everything around tokenization. They talked about it last night as well, and just how Vlad said this is going to be the biggest innovation over the next decade. Tokenization. Because if you can trade anything, any asset in the world, real estate, different types of commodities, just by tokenizing them. SoFi's talking about tokenizing mortgages. Like, everyone's realizing, wait a second, the global ecosystem for financial assets tokenized, and Robinhood being at the forefront of that by already unleashing it to 600,000 customers internationally that they have now, based on the European markets being able to just buy equities in America that are tokenized and get the same asset exposure. That is a very big market opportunity. And that is just one of many verticals they're going after. I am not selling a single share of my stock. You get an earnings like that, you get a management that has the direction and the ability to tell you what they're going after in the future. Then you just have to believe in their execution. And quite frankly, I really do believe in their execution. Grab. Let's talk about that. So fun fact, when I was talking to Vlad for some time after the earnings call, I was just like, we were talking about the stock, and I was like, yeah, man, 8 to 100 is pretty incredible. And he's like, yeah, you made a good call. And I was like, yeah, well, the thing is, people thought I was really lucky on Palantir. I can't even blame people for thinking that. The first one's always luck. For Robinhood, it kind of solidified, hey, maybe you can find different opportunities in the market, and that's why it really helped me. And then he stopped me and he was like, yeah, you have a third one now too, right? Vlad reads everything, bro. He is on X. He reads everything. I was like, yeah, I do. He was like, Grab, isn't it? I was like, dude, he reads everything. So yeah, we talked a little bit about Grab as well. So he knows that this is the third name, my third album that I have publicly attached my brand to. And I'm very happy to do it regardless of the stock cooperating at this moment, because my goodness, did they crush it. $819 million in revenue, 23% year over year. Their fourth consecutive GAAP quarter. Street thought they would do 10 million in EPS. They did 20 million, 109 million adjusted EBITDA, record high, 46.2 million monthly users, another record high. That is almost 7% of Southeast Asia's population. Their loan book is at 708 million loans. That's up 44% year over year. And they have a $236 million annualized advertising run rate. We'll talk about that more later. That's very good for their high margin business. That is up at 45% year over year. There is a lot to get into in Grab, and I am going to make probably a video on it, and I'll post it on X later, because it's probably gonna be like a 30 to 45 minute video of me just giving out my thoughts versus me writing it up. So watch out for that video, probably coming out like tomorrow or on Saturday. But I went to the earnings call last night, and At its core, the company is continuing to increase profitability, maintain top-line revenue growth, grow their users, scale their network effects. They talked a lot about their network scale, their economies of scale, and the ability for them to capture market share because of how much they're penetrating in these different markets. Take the market share from competitors that aren't able to actually compete, and do all of this with $8 billion in cash. The stock didn't move yesterday, I think, because of a lack of EBITDA guidance and a lack of a raise on that EBITDA guidance, which I kind of expected. And that was kind of my warning. I said, hey, I don't think they're going to raise guidance. They tend to do that in Q3. When they do that in Q3 2025, I think along with the broader market kind of getting into that Santa Claus rally mode, that's when you're going to see some momentum. I think fair value is 750. I think that is achievable by the end of the year. But they left their guidance unchanged. And amazing numbers, but if you leave the guidance unchanged, the street probably doesn't have any major catalysts to get super excited about, which is why I think the stock is flat. Quite frankly, this stock is in accumulation mode for me. I have a lot of shares. I'm ready to buy more. $8 billion in cash, executing the way they're executing. I mean, I talked to a couple of shareholders last night that I really trust that have been covering Grab, and they were like, dude, this was a quarter that lets us know we are in the right name. They're not screwing us. They're not randomly diluting us. They're not they're not doing deals with Yorkville Capital. There's nothing wrong with their books. They're not cooking their books. They're maintaining top-line revenue growth. They're accelerating in every category. The only thing that's not profitable is financial services, but they are guiding for that to be profitable by second half of 2026. And second of all, and there's a CFO interview with Grab that we'll watch later in the stream because he did an interview last night with the international CNBC. They're going to get $1 billion of loans on the books by end of fiscal year 2025. They're at 700 million right now. So although that's not going to be profitable till the second half of 2026, they are rapidly scaling it. And they're scaling it because they see the scale of opportunity. There's a lot of nitty gritty kind of stats that I can get into, but here's one for you guys. Last quarter, they had 190,000 active advertisers, and their advertising spend was something up like 25% year over year. The amount of money they're spending on the ads on Grab's advertising business, which I think is going to be very successful because they have a proprietary AI moat when it comes to being able to have the data advantage that they have. That 190,000 last quarter went to 220,000 this quarter. They're spending 45% more in terms of the amount that they were spending last year over year. And they're getting an 8x return on advertising spend. There's not many places where you can put in $1 and get $8 back. And the reason the advertisers are so happy to use Grab is because you only pay if you get an ROI. You only pay if you get an ROI. Right? It's like a Google pay-per-click search, right? You're not gonna get charged unless someone actually clicks on the ad. And so the advertisers are loving it. Advertising, based on Meta putting up $45 billion of advertising revenue, shows you how profitable of a business that is. And in Southeast Asia, there's just not many opportunities to be able to use advertising with the type of data that Grab has, or the type of users that Grab has, which creates their data moat. So look, there's 4 billion shares outstanding. The toots are loading. The stock is going to be the stock. I don't know if the stock deserves to massively shoot up, even though I think it's undervalued at this point of time. But I don't think it deserves to also massively shoot down. And I think it might continue to be in the range of like 520 to 550 that we've seen for a while. It's honestly been a very good day trading stock for those that are playing the volatility up or down. But I think they're going to hold it in a range. And until we get clarity on what they're doing with the $8 billion in cash, which they basically said yesterday, hey, we are exploring opportunities. To me, they did not raise $8 billion in cash at a 0% coupon, a basically MicroStrategy deal to do nothing with it. I think they have a plan. I don't know what that plan is. They can't obviously tell us what that plan is yet. I mean, they've obviously mentioned M&A, but they can't tell us who they're buying. But I think they know what they're doing. And I think by the end of the year, hopefully we get more clarity on that. And if we don't have any use of the cash, it's $8 billion on a market cap that's $20 billion, enterprise value of $14 billion, doing $3.4 billion of revenue, growing adjusted EBITDA at 70% year over year. Like, to me, with a 4-year consolidated base, I think it has a shot to break out. So very bullish on Grab. I'll give a lot more thoughts later. The overall ecosystem is expanding rapidly, and this is an accumulation phase for me. And I believe that the more and more they continue to execute on the top line, the more and more we will see eventual progress on the bottom line when it comes to the stock price as well. Meta right here, 772, that's up 11%. Amazon at 236, that's up 2.6%. Palantir right here, 160. And then Robinhood at 105.68. Okay, so we have a ton of earnings that are coming out. Figma does not go public until 12 p.m. So for everyone expecting the IPO at 9:30, you are not going to get that. It is going to take a few hours. But when it does come out, we will see what happens. MasterCard beat on the top and the bottom. They beat EPS by 3%, beat revenue by 2%. MasterCard is up 2%. Not bad. That's a very big company. So nice to see MasterCard is beating. Roblox Not bad. They missed on EPS by 14%. That probably has to do with something in their guidance, but they beat on revenue by 13%. That stock, I believe, is up 15% in the pre-markets. It is up 16% now in the pre-markets. So that's green. Norwegian Cruise Line, that is up as well, 10.85%. They crushed earnings. I will try to get their numbers in a second. I don't see their numbers right now on my screen, but obviously it seems like they had a good quarter, and people are going on cruises, which is good for the state of the consumer. I don't know why RCL fell. Maybe there's an RCL specific reason for why Carnival and Norwegian did well, but Royal Caribbean didn't. CVS, they beat by 24% on EPS. They beat on revenue by 5%. That stock, I think, was also green. CVS, yes, is up 6%. So it's one of those days where after Microsoft and Meta, if you have a good earnings, because the market is so happy, they're willing to give you some love. Whereas yesterday, the market was so scared of JPOW, which we'll talk more about what JPOW said as well. The market was just kind of like, tanking every stock, even if they had good earnings. And then you had Bristol Myers Squibb. They beat by 33% on EPS. On revenue, they beat by 8%. BMY, that stock is down 3.4. So that's one of the only ones that's actually down 3.4%. I mean, so far earnings are going good. I have no idea what Hood or Grab are going to do at open. Remember one thing about Grab as well, it didn't have a lot of liquidity last night when the earnings came out, because they came out at 7:30, market closed at 8 p.m. I would not be surprised if it sells off. I don't think there's a reason for it to sell off, but obviously you got algos doing what algos do. You got market makers that might want to keep the stock at a certain range. I genuinely care about the company, and I care about a risk-adjusted opportunity. Risk-adjusted meaning, can I buy shares of something every week, every month, whenever I buy them, and can I be okay with the price I'm getting? And can I also be okay with the opportunity cost of not buying a Meta or a Microsoft or something because I believe in this over the long term? Like if you bought Meta at 700, you're up 10%. That's great. Being up 10% is awesome. But it's up 10%. Like if I'm thinking Grab is a double, that's up 100% over the next couple of years. And I'd rather be building that position out there if I think that can happen. So as a long-term investor that really does want to hold this for a while, my question is, did they put up the earnings to get there? And if they did, and the stock doesn't cooperate, it is what it is. But that's more of what I care about. Same thing for Hood. I mean, Hood has already made its massive move this year, so you just can't be upset if the stock doesn't cooperate today after those earnings. But this stock should be 120 right now based on those earnings. It just should. Like, it's just like, you can't fade those earnings. I do think there's some truth to the fact that August is creeping up behind us. JPOW, by the way, was pretty hawkish. Like, let's just not sugarcoat it. JPOW was pretty hawkish. He did not confirm a September cut, and he basically said, I don't know about September because inflation is sticky and the labor market is not weak. So why should I say that there's any progress on a September cut? And if Meta and Microsoft didn't have the earnings they had, I think we would have a different pre-market today, because JPOW was not friendly. And you saw that the market tanked while he was talking, not tanked, but like everything kind of fell from the highs and you were down 0.45% of the S&P. Microsoft and Meta brought it back to life because you cannot deny this AI capex trade. So you got this weird macro stuff, Trump with South Korean tariffs. We'll talk about that in a little bit as well. But then you also have Meta and Microsoft that cannot be ignored. And I think the market's trying to figure out in the next month, hey, where do we take this? How do we interpret what's happening in this market from an earnings perspective, but also from a macro perspective? And I think that's going to be the broader question that investors have to think about over the coming months. And if we do get some juicy dips because of seasonal weakness, based on the earnings that I'm seeing, these are dips you buy. At least these are dips I'll be buying. And it's just a question of how the market ultimately interprets it going into the second half of the year. All right, folks, 30 seconds. 30 seconds. Let's see how this all plays out. We'll look at some of the other macro data. We got a bunch of other headlines. Jose, Devin Ryan, a bunch of guests will be joining later throughout the show. We got the Figma IPO, I believe, might be a little bit earlier than 12 p.m., might be at like 11:30. So we'll try to see how that goes. We'll see if I get an allocation. You'll probably know by around 10 a.m., 10:30 if you get the allocation. And let's see how this market performs. Thank you, everybody, for being here. Thursday, July 31st. The time is currently right now to open up the stock market. Wake your ass up. Let's get into it. Microsoft, 551. 551. That opens at up 7%. Market cap is now $4 trillion. Microsoft is the second largest company in the world behind NVIDIA, $4 trillion. Meta, $1.94 trillion. That's holding 11%. Grab is dumping, down 5.67%. Again, I do not think those earnings were a reason to dump, but the market is being the market, and that's dumping. Hoodie, I do not think those earnings were a reason to dump, but the market is being the market, and that one is dumping. SoFi, 22.92, that's trying to go back to 23. That's up 4.5%. HIMS, that's up 1.57. AMD, 182, that's green. Palantir, just below 160, 159.95. But that is trying to get back to 160. Rocket Lab, 46.84, that's green. Tessie, slightly green. S&P 500, new all-time highs. S&P 500, new all-time highs. Meta right here, 767. That is holding 10%. It is not getting hit yet, and it is holding on. Microsoft at 545. That is getting a little bit of a dump. A little bit of a dump. Not a dump, but it's from 560 to 540. You got a low from the intraday pre-market highs, but still that's green. Meta right here, 10%. You probably have some people taking profits right here. Grab, really getting dumped. Don't know why. Don't think the earnings justify it, but nonetheless, that's getting hit. Robinhood also really getting dumped. I don't know why, because I don't think the earnings justify it, but this is the nature of markets. Bitmine is up 4.85%. That's green. Ethereum 3,700. SoFi 23. SoFi 23. So SoFi is getting momentum. The dilution stuff is being factored in. Palantir 158.85. Weeble's up about 1%. Nebius is up 5%. Wow. Data center plays should be mooning right here. CoreWeave, I believe, is probably green. Astera Labs, that's up 5%. CoreWeave, that's up 8%. Let me just go to the semis real quick. All the semis green across the board except Qualcomm. Their earnings were kind of ASML, the street just doesn't like ASML. I don't know why, outside of their guidance. Intel down 1%. ON is down 1.4%. ARM, what the heck did ARM report this morning? That's down 13. That's ugly. AMD losing a lot of its pump. NVIDIA also losing a lot of its pump. You're getting some weakness, folks. I think August is around the corner. It is tomorrow, and maybe the market's saying, we're going to go higher, but just not yet. Micron right here down about 4%. Okay, so you got a few semis that are getting momentum. The majority of them are actually tanking. Oracle right here is 255. Oracle's at all-time highs. That's holding up. Meta still holding 11%. Grab, disgusting dump at 489. Hoodie, disgusting dump at 102. So those two are getting hit. Palantir 158. That's also getting a little bit of a red candle from 160. S&P still holding on at 638. I guess Meta and Microsoft are carrying the S&P. Google, why is Google tanking? Like, Grab, Google, and Hood should not be down the way they're down today, but they are. And it's, I guess, the nature of algos in different directions. One thing I will say, and someone floated this thesis this morning, I thought about it last night, Meta and Microsoft might be sucking out a lot of liquidity in the market. It might be sucking out a lot of liquidity in the market. If you see Meta results and then you have some Grab shares and you're like, you know what, I don't love Grab that much, but Meta is like crazy. They're spending all this money on AI. I'm going to dump my Grab and buy Meta. If you're up on Robinhood by like 200% and you saw Microsoft earnings, you're like, all right, I already made 2x on Robinhood. I'm going to buy something safer, Microsoft, which objectively is safer than Robinhood, right? I'm going to dump my Robinhood. I'm going to buy some Microsoft. For Google, maybe people are looking at Meta and Microsoft and they're saying, hey, Google's just not on the same level as them. I think those people are wrong. And maybe they're dumping their Google for Meta and Microsoft. So you might have a little bit of a liquidity move in the market on two specific names that are generating most of the alpha coming in. And that could also be happening right here. Microsoft, 545, that is still at 4 trillion. So that is still green. UNH, where is that one? UNH, that one is, wow, down 2.5. UNH, I think William Blair downgraded them to like 190 today, 192. They got their first below 200 price target. So we'll talk more about that one, but that one's getting hit. SoFi is running today. SoFi 23.23. That's up 6.5. So it is nice to see SoFi recovering after the dilution, almost like investors are just saying, all right, you have the green light, go do what you have to do, buy a company and keep going from there. Novo, is that one still getting hit? Novo, wow, Novo below 50. Novo below 50. Is HIMS taking the slack for that? HIMS is at almost 67. There you go. I mean, what a turn of events. And HIMS is literally at the same price it was at, or a little bit above that same price when it got hit with the Novo stuff. And Novo is now down at record 5-year lows. Incredible. Absolutely incredible. What about Coinbase? How is their stock? Coinbase, they don't have earnings until I think next week. 380 on Coinbase. That's up 0.77%. That's a little green. Oracle's holding up and Meta's holding up. Meta's actually expanding to 780. Microsoft is losing 560, but it's holding on to 4 trillion at 545. I think if it dips below that like 537 ratings, it loses 4 trillion. And then Robinhood is just getting dumped. Robinhood is just getting dumped. APLD, did they have earnings today? I didn't check if they did, but I believe that one's green. Applied Digital, that is up 33%. Okay, something happened with them today. I would imagine they had earnings to be up this much. Figma is at 12 p.m. It's not right now. So we're not going to know about Figma for a while. But these are the names that are moving right here. Yeah, I mean, look, I get it. WTF Hood. I those were good earnings, but this is the one thing I was saying before earnings is like, hey, the stock's up a lot, and at the end of the day, the street might sell it off to sell it off. Now, remember, this is also what happened before. The stock was up a lot going into the Q1 print. If you look at it on a year-over-year basis at the time, right after the tariff dump, and it tanked the day after, even though they put up phenomenal results. Sometimes stocks run hard into the print. Street needs time to digest it. They think there's other opportunities. They take their profits and then you move on. But in terms of a red flag on Hood or Grab, I would tell you guys if I thought there was a red flag, I genuinely didn't see it. Could some metrics have been a little bit better here and there? Sure. But like in terms of a, hey, dump this thing 10%, we're leaving. I think that's a bit more algorithmic than anything or not. And I think that's why, and I think that's Meta and Microsoft taking a lot of money out of other stocks because of the really blockbuster earnings that they put up. SoFi now back below 23, but still holding 22.95, and Applied Digital, that's up 35%. That is up 35%. Was PCE today? Yes, I think I missed it. Did it come hot? It came at 0.3%. Okay, well, folks, here you go. This is your reason. This is actually your reason. The reason Microsoft and Meta are not dumping is because it's Microsoft and Meta. Right? I mean, like it's those earnings were crazy, but look at this. PCE 0.3%, the largest increase in 4 months, following an upwardly revised 0.2% gain in May. In line with expectations, but still largest increase in 4 months. I mean, it kind of reaffirms what Jay Powell said, right? That inflation's sticky, and as a result, they're going to potentially not cut rates. I mean, he said, hey, we might not cut in September if inflation's sticky and the labor market's strong. So the probabilities for a rate cut, I think, went down for September as well. It was 62% 2 days ago. Now it is 39%. Wow, that's a big one. That's a big one, guys. That's a bit I think that's your reason for Grab, Hood, for a lot of these names that didn't have the Meta Microsoft types of earnings. Dude, it just got almost cut in half to 39%. That's an issue. I mean, you go from 60% to 39%. 60% already wasn't like that convincing. Now it's below 50. There is a world where the market says, hey, we're just going to chill out until we figure out what's going on with inflation. Grab right here again, down 7.5. I can't give you a reason on the earnings. I think this is algos. I think this is market. I can't give you a reason for Hood either. But the market is the market. And sometimes the market does what the market needs to do. And if there was a legit reason that I could point to, like, hey, this part wasn't good, the market's upset about that, I would say it. I can't think of it. If anyone has it, let me know. I'd be willing to look at a different thesis. But I cannot see that yet. S&P is being held up by Microsoft and Meta. That's the only reason it's up right now. Google's down 2%. Apple, they report tomorrow. Apple is, wow, Apple below 210, 208. Apple 208. Check Trump tweets. Let's see what he did say. He did get mad at, what's his name? Powell. He got mad at Powell. He said, Jerome, too late. Powell has done it again. He is too late and actually too angry, too stupid, and too political to have the job of Fed chair. He is costing our country trillions of dollars in addition to one of the most incompetent or corrupt renovations of the buildings in history of construction. Put another way, too late is a total loser, and our country is paying the price. Jay Powell's argument is, hey, I think inflation's sticky and the labor market's not weak, so why do I cut? You had two Fed governors dissent, Bauman and Waller, for the first time since 1993. So this war with Trump and Jay Powell does not seem like it's ending anytime soon. Wow, Meta, 783. 783 on Meta. Absolutely getting this moment. I'm telling you, a lot of liquidity is getting sucked out of the market and it's flowing into Meta after those earnings. It really does feel like that's happening. Hims right here at 67.30. That's going green. Bitmine is up. S&P still up. Hershey's is down. Starbucks is down after their earnings from 2 days ago. Granny Shots, that's up a little bit. TSM, that's up a little bit. Where's ARK? ARKK, that one's up 1% on the day. SoFi still holding. Oh, ARK bought, I think, 700,000 shares of SoFi yesterday. So she bought the dilution dip. And she's green. And Meta right here at 784. Even Palo Alto's getting hit. Yeah. Look, I'm not selling anything. The only hedge I have on my portfolio is covered calls. Palo Alto now down 11% over the past couple of days. But it's hard to deny, bro. We're getting into a seasonally weak time in August and September. It is what it is. Market's red hot. Taking a breather is not crazy. A lot of these funds need to allocate capital, and they're probably waiting for a dip. And I think they will buy the dip, but the question is, how much they have to wait for in order to get that dip. So I think that's kind of what we're seeing right now. Yes, I talked about Grab. If you rewind about 20 minutes, we talked about Grab. again, dude, like this is the nature of investing. We celebrate, you know, when Robinhood gets to 100 and we're all ringing the cowbell celebrating, it's great. But to get to that, you know, when I wasn't doing a live stream every day, I also had to deal with Robinhood tanking on really good earnings back when they were $10. I had to deal with that, right? And Grab is not at a Robinhood stage where Grab is going to just go to the moon or Grab's going to 3x automatically because they're in their inflection of growth. And that means you're going to have quarters where they have phenomenal earnings and the market's like, we don't care. I mean, Google, right? Phenomenal earnings. Meta's up 12% after their earnings. Google, market's like, we don't care. 194. This is the nature of investing. And you kind of got to be able to deal with it if you have a long-term thesis. It really tests your conviction, but it also forces you to become a better investor. And it also makes you realize the stock price is not everything. The company is more so a reflection, or the stock price is more so a reflection of the company's execution, and that takes time. And if you don't have the time, then you know it's hard to be an investor. But if you have the time, like I did with Palantir and Hood when they got dumped every good earnings, but eventually the street recognized it, that's what you have to do. And same thing with any other name that you're in that has great earnings that might just not be reciprocating in terms of its price action. Marvell right here, 82.18. They had a great partnership with Microsoft and South Korean AI companies yesterday. So that got it up to 82. That's up 10% from yesterday. Dell right here, 134. ASTS, that's red. And then Rocket Lab right here, that's also now red, 46.37. 46.37. What's happening to Nubank? Oh, I think Trump announced more Brazilian tariffs yesterday, like an additional tariff, if I'm not wrong, which again, this is the nature of investing, right? Like Nubank is executing at a phenomenal level. Like their earnings are unbelievable in that part of the world. And then you got Trump saying this tariff stuff and the stock, like, you know, it's just, you got to have a long-term thesis on some of this stuff. Otherwise it's the nitty gritty macro stuff that challenges these companies for whatever reason, whether it's algorithmic, it's Trump tweets, it's the company, the market just not caring about their earnings. It's part of trying to be a long-term investor on these names. Hims right here, trying to go for 68. SoFi still holding 23. Oracle 254. Meta slowing down a little bit, but basically it's still at 780. Robinhood trying to recover. Grab also trying to get back to 490. But both of those stocks down today. Bitmine up about 2%. I will try to get APLD's earnings because I imagine the stock's up 20 or 35% because of earnings. Q4 revenue beat, adjusted EPS beat, driven by cloud AI demand. The company secured $7 billion in a 15-year lease agreement with CoreWeave. For Q4 revenue was at $38 million, up 41%. That is why Applied Digital is getting a 30% move on its stock. $3 billion company. Trading on Figma is not halted. Figma will not go public for another 2 hours. So, or maybe even 2.5 hours. So that's why the price is 33. They officially determined the offering price, but it's going to take a couple hours before they actually go public. ABCL, by the way, wow. Dude, wasn't Appcelera at like 570 last week? Yeah, this thing is down 10% in the past 5 days. Well, it's actually done more than that because that's from 550. Got to 570, 580 at one point last week. So it's down almost 18%. So even this one getting dumped across the board. And again, I think that's a lot of liquidity. Yeah, 582 is what it got to. I think some liquidity is like, hey, we believe in ABCL, but like Meta just beat revenue by $3 billion. Like we're buying Meta, right? A lot of these names easily get dumped if you've got Meta and Microsoft putting up those types of earnings. And the fact that Meta and Microsoft haven't dumped means that the street is like buying into this versus selling into this as aggressively as some people thought would happen. If we get shares assigned, when do we sell FIG? So I can't tell anyone when to sell. That's up to you. I know that if that thing shoots up, I'm selling. Now, maybe I want to see how I'm going to be looking at the stock. I'm going to say if I get a double, I'm probably out. I'm not really going to be there for the long term. But could Figma become a Circle? I mean, Circle with stablecoin is kind of different. Circle 6X. Could Figma actually do that? I don't know. Stablecoin is a whole different ecosystem and ballpark. But I think Figma can double today, and I'd be happy with the double. Now, remember, if you sell after you get shares allocated on an IPO day, you have restrictions on trading IPOs in the future. You might be banned for 60 days because your brokerage might not like that you're flipping the IPO. So you have to make sure you look at your terms and conditions. But I would personally get out at a double. But I'm not going to get out at a double because I'm not going to get any shares. It is going to be very hard to get an allocation into this IPO. So I know people are excited about it, but you got to see if you even get a chance to get allocated, because I think for a lot of people, it's just going to be tough. It's going to be a random lottery. See if that happens. Yeah, the Figma CEO pay package is actually really good. I was looking at that last night. It's almost like an Elon Musk type of package. He's got to get the stock to like $140 for him to get paid in the next 10 years, maybe the stock goes to $140 today based on the IPO, but it's going to be priced at 30. So he's basically got to 3x the stock over the next decade for him to really get paid. Who knows what's going to happen after the IPO, and he has to sustain the stock. So even if it pumps and then it dumps, he doesn't get paid, but he does have a very favorable compensation package. He is very shareholder motivated to get the stock up. And then the business overall is pretty cool. And it's growing. They have cash, all that stuff. So it's a great thesis. It's just, it's so oversubscribed. I don't know if people will actually get access to it. It's a range. So it's not literally 130. It has to go from like 100 to 130. That's why I'm saying a 3x. But like he has different tranches of compensation as it gets above that $100 price. And that's his compensation. NVIDIA back to 180. Dude, NVIDIA pumped so hard yesterday, but there's your red candle right there. Again, this red candle is stupid because after what Microsoft and Meta said, yeah, you should be buying NVIDIA. I mean, like I personally would be thinking, hey, if I'm a fund manager, NVIDIA is the answer to what Meta and Microsoft said. But NVIDIA's pumped a lot. It's pumped a lot. And so you also have people that are selling into that strength, especially when they're about to go on vacation and they don't want to worry about the stock market, like a lot of these money managers over the next month and a half. And I am surprised, honestly, I'm surprised Meta and Microsoft aren't experiencing a little bit more of a dump. I mean, Microsoft is from 560 to, okay, there you go, 539. Now it's below 540. Meta, though, is holding heavy. And given the volatility we saw yesterday and given Jay Powell's comments, given PCE today, you would expect people, even though those earnings were amazing, to take profits because it looks like August might be a little tough. But that's not really happening on Meta. Not yet. Amazon is getting a little bit of a dump as well, 238 to 232. I mean, the bar is set for Amazon. If they don't have a Microsoft Meta type of quarter, I think they will continue to dump. Because like Google had a good quarter. It didn't have a Microsoft Meta type of quarter in terms of the level of earnings beat. It had a phenomenal quarter. It wasn't like a $4 billion revenue beat. But there was no red flags in Google's quarter. I mean, search in particular, right? Growing 12% year over year. But it seems like Amazon and Apple have to now live up to Microsoft and Meta to be able to get any liquidity. And then HIMS right here, is it above 68? HIMS it touched 68, 67.80. That's up 3.6%. So you got different pockets of the market that are getting some momentum. Robin, is that recovering a little bit? Hoodie is okay. So we went from 101 to 105. So that one's getting a little recovery. Grab still down 8.7. That's a pretty nasty sell-off on those types of earnings. I will be buying that dip later, but I'm not sure exactly why that's getting hit as bad as it is. SoFi 23.32. Like again, when you have a company that has something bad in the earnings, you can point to the reason: lack of guidance, they missed, blah 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 blah. I don't see anything from Grab other than they didn't guide higher. But to me, that's a stupid reason to dump it because they never guide higher in Q2 because it's one of those quarters where you don't guide, right? You guide in Q3 because you're getting towards the latter half of the year. So if they're dumping it because the guidance wasn't raised, then okay. But that's more so a 3-month, hey, be patient Q3, we're probably getting the guidance. So now in Q3, if they don't raise guidance, I will say, hey, I don't like that. I will say, hey, like I really expected them to do a lot more than they guided for in the beginning of the year. I don't like that they're not raising guidance. Maybe there's some issue in the business that is not allowing them to sort of beat and raise. But I don't expect that for Q2, right? And so that's something you have to take a little bit more time into consideration to see how it ultimately plays out. HIMS right here, 67.90. Nubank is still down 1%. Venture Global, that's up a little bit. GE Veranova is up. Weeble's up. Lemonade is up. APLD, that one's still up. CoreWeave is also still getting some momentum along with Nebius. As CoreWeave, wow, 12%. And then Nebius as well is up 5%. eBay had earnings today. I think they crushed it. eBay, 15%. When's the last time eBay was up 15%? I think it's been a while since that has happened. Maybe AWS is losing lead to Azure. Well, we're going to find out today because when Azure guided for 39%, that to me is either the market is so big that everyone's growing or they're stealing market share. And I kind of think it's the former rather than the latter because Google also accelerated GCP growth. So I think AWS should accelerate versus like, say, Microsoft's taking our lunch. And as long as they do, I think Amazon should be fine today. But we got to see how this ends up play out. Yeah, South Korea deal had a lot of natural gas included as well. So real quick, let's just take a look at that. There was just so much stuff happening yesterday. So I did not have time to dive super deep into the South Korea stuff. But it seems bullish, right? Trump says the deal is that South Korea will give the United States $350 billion for investments selected by myself and my administration. They will purchase $100 billion of LNG. and they will get 15% tariffs, and they will accept American product, including cars and trucks and agriculture. I mean, we got to get even more specifics to see if it's solidified. But if that's true, the fact that you're getting a little bit of a market dump, even with the South Korean deal, means that the market cares more about what Jay Powell said yesterday and maybe a little bit of the fear of a rate cut not happening versus the trade deals. Because there's a balancing act. Trump has to get more trade deals to get the market to think, oh, Jay Powell's going to lower rates, because the reason he's not lowering rates is because the tariffs, which are antithetical to the trade deals, will increase inflation. Well, if you have more trade deals, you should supposedly have less tariffs. You should have less inflation. But Jay Powell was a hawk. And if you really read what he said, you listen to it again, like it does not sound like this guy wants to cut in September. And I think that could be freaking out the market, along with the PCE that we got today. That was obviously a bit hot, given it was the highest in 4 months. Microsoft, now it is getting a bit of a red candle, 538. It's still up 5%. It is $100 million away from falling below $4 trillion in market cap, but it's still holding $4 trillion. HIM's all-time high is 72, so that's what it's got to crack. It looks like it's trying to go for 69. It's up 4%. I don't think there's a HIM's headline outside of the fact that Novo is losing to compounders. HIM's is a compounder, so maybe the street's rotating. Novo getting demolished again, down 2%. Robinhood down 1.6, and then Amazon right here is up 1.43. So there you go. SoFi, by the way, yes, that is also up 5%. That is up 5% as well. All right, let's see some other headlines we got going on. 2352. I mean, if SoFi can get back to 24, that would be very bullish. If that would just break, I mean, it's basically the street saying we believe in Noto's dilution. That's basically what it would be if it gets back to 25. And I think that is fair to assume, given, you know, SoFi has been executing pretty well over the past couple months. MSTR, is that moving at all? MSTR is 403. That's up 2.2%. Bitcoin as well took a nasty beating after Jay Powell talked yesterday. Bitcoin right here, 118.5. Dylan Fields, the CEO. Let's take a listen to him. He is going public today with Figma. Let's get a little bit of an update on why he thinks Figma could be a good deal.
I'm just so thankful to be here with the team, with our community outside and inside the building. And it's going to be a remarkable day. It's not just Figma going public today. Design is going public today. And
so, I was going to say, so for those who don't know, just that we're uninitiated, explain what Figma is to folks.
Absolutely. So Figma is a platform that helps you go from idea in your head to digital product. And we try to do all the steps of that product design development process, whether it be whiteboarding and brainstorming, slides, and making it so you can create presentations. Figma Design, our flagship product, allows you to design visual screens. We have ways for people to go from design to development, and ultimately, in the case of websites, ship real websites to out there and publish them, and many other areas as well. We're also focused on now shipping marketing assets at scale. And I think the product that we're even most focused on right now is Figma Make, which allows you to go from prompt to working app all in Figma with your Figma designs as part of that prompt.
So the valuation for this company, $19.3 billion. It was oversubscribed. We'll see where it lands later today. What was that like for you? Obviously, you tried to sell the company for $20 billion. So it's sort of this, I'm just actually curious on a very personal level, sort of watching all of that unfold, what that was like.
Yeah, I mean, I think the most important thing to remind myself of, the team of, is share price is moment in time. We're going to see all sorts of behavior probably today, over the weeks ahead. And, I'm not going to say it's just noise. You can't tell people that don't look at the elephant in the room. There's an elephant in the room. It's dancing. It's drunk. But I think at the end of the day, what's really important here is that we control the inputs. And so what I've been talking about with the team is we have to stay focused, stay on mission, listen to our customers, and really keep our priorities in mind, because this is such an opportunity. We have such a moment here, not just with today at the New York Stock Exchange, but in this greater moment to really impact the way that people do design. And I think that, the thing that I have really stressed to the team, and we've had a thesis on for a decade now, way before anyone was talking about AI, was how design is the differentiator. As all these inputs to software get cheaper, more accessible, design and craft, that's how you stand out in an ever-increasing world of competition for software. And
what do you guys think? Are you excited for it? Are you excited for it? Do you think it's real? By the way, I just bought 1,000 shares of Grab, 488. I just bought 1,000 shares of Grab at 488. Palantir, new all-time highs, 160.57. I believe that is based on Microsoft earnings. That is getting it some momentum right here. Enterprise AI cloud is growing, which means enterprise AI software should be growing as well. Palantir right here, 160.48. Again, on Figma, I think it'll be a great business. Have no idea what the stock's going to do, but Dylan Fields, he's an awesome entrepreneur, and he built this company with his bare hands back in 2011. It's been a long journey for them. So I think the IPO will do well. The question is long-term, what are their growth prospects? And it seems like he's pretty excited. Again, they almost got acquired by Adobe for $20 billion. So it seems like in the public markets, they have a better shot of surviving and really thriving beyond $20 billion, way beyond that, given the momentum that they have in the business. Palantir right here, 160. Where is Hoodie? Hoodie's at 105.28. And then Hims. Wow, Hims is about to go for 70. Hims looks like she's about to go for 70. Hims looks like she's about to go for 70. I bought the grab at 488, guys. 488 was the dip. About 1,000 shares at 488. 69.65. Let me check resistance. This is why I didn't sell my Hims. I was like, you know what? Hims will figure it out. Though. Stupid Novo thing can't take them down forever. It is kind of ironic though that Novo freaking is now down 30% and Hims is up 30% from the drop. Like, it is really ironic. $70 resistance has, dude, it has 2,000 shares. This thing's gonna crack 70. If the volume comes in, this is gonna crack 70. I mean, it's gonna be hard to see it not get above. SoFi 23.50. Amazon's going up a little bit. Robinhood is about to go green. Robinhood goes green. 3 cents away from going green. We'll have Devin Ryan on in 30. There you go. Robinhood goes green. Robinhood goes green. Is there any news? We're seeing a bunch of green candles. Is there any news? You guys see any news? Let me see. I don't see anything. I've seen a lot of green candles. Robinhood, there you go. Going green on the day after earnings. I don't see news yet. But you got some momentum. Hoodie 106.50. Grab 494. There's got to be something macro. Everything going up all at once. Did Trump say that he's going to personally lower rates himself? Did Trump say he's going to go to the Federal Reserve and literally press the button to lower rates? Is that? Wow, Hoodie 107. Wow. Palantir trying to go for 161. SoFi trying to go for 24. CoreWeave's up 15. NVIDIA back to 182. Guys, something's happening. It's either the algos decided in the morning to just all dump together and then buy the dip and then pump back up, or we have a piece of news. But I don't have that piece of news. I don't see the piece of news. But it's got to be something. This is all happening in unison. This is all happening in unison. Nebius as well. Nice little pump. Microsoft, Google's trying to come back a little bit. It was at 192. Now it's at 194. Microsoft is above 540. Microsoft's still below 538. It's holding on, but not as much. This pump's got to have legs behind it. It's trying to get legs. Hims is trying to get to 70. It's 10 cents away. But you're seeing some legs form on some of these names. Meta's still up 12. Dude, Hims is literally 14 cents away from 70. Maybe the algos were trying to head fake retail. AppLovin, what about that one? Wow. Why is AppLovin up 9%? They didn't have earnings. Is this because of Meta and advertising or something? It has to be because of Meta's advertising, because like it's just AppLovin's in the advertising space. Wow. Hims 70. Hims breaks 70 for the first time since February. What a turnaround, bro. If this maintains momentum, it's just below 70 right here. You broke it pretty quickly, but there you go. Yeah, of course, Nate shows up at 70. Yo, you guys saw my seal claps yesterday on the on the earnings call? I was looking at the chat and I was clapping when they were introducing Vlad and Jason. And that's how I gave it away. It wasn't even a surprise. You guys knew. You were like, this guy freaking is doing his seal claps. You could see my hat. You could see my claps. It was hilarious. It was hilarious. Hims 70, Hoodie 107, Palantir holding 160. Where's Grab? Are we trying to get back to 5? Grab 497. I mean, dude, it's just at 480. So guys, this, if anything, what you're seeing right now, for those that are like new to the stream and have never seen this before, a lot of people have seen this, you know, if you've been part of the stream for like the past couple of years. This is classic algo manipulation to the upside and to the downside. Classic. For the past 20 minutes, everything was dumping besides Microsoft and Meta. And in the span of 2 minutes, everything makes an intraday low, and now it's going back up. This doesn't just happen randomly. Like, absolutely, these are algorithms controlling the names. Now, the question is, why did they dump and pump? We don't really know. Maybe there's no reason. But for whatever reason they did it. And we're seeing it in front of us. Hims holding 70, Hoodie trying to get to 107. AppLovin, I have no idea why that's up 10%, but that is now the largest market cap company that is not in the S&P 500 at 134 billion. They might be the candidate when Paramount gets kicked out on August 7th. And I can't blame the S&P committee for picking them over Hoodie, but Hoodie or AppLovin could be up to get in. Maybe it's another company again besides those two, but AppLovin right here is up 9%. Hims right here 70, and then Robinhood trying to get above 107.50 on the day. We got Tanner in the chat. Stock draft update. That's a good idea. Let's take a look at it. Mine should be lower today. Oh, Tanner. Yeah, I forgot. Tanner's asking because he has AppLovin. By the way, Steve should be on the market close with me, like the whole market close today, because he's working from home. So on the market close, Steve should be on for a good amount of time, and we will talk big tech. Steve has been a very big Meta bull for a long time. He's owned shares since the IPO, so he is super excited about Meta, and we'll talk about that as well. Matt's up 20%, Tanner's up 11, I'm up 9.8, Steve's up 5, Kris is down 0.72. Again, Novo and UNH is really what's hurting Kris right here. But Matt's at 20, Tanner's at 11. He's up 6% on AppLovin. I'm up 40% on Hood. I'm down 27% on Duolingo. On AMD, up 42%. That's the best one for me. And then Steve Hims now is up 17% from him. Microsoft's up 12.6%. He also had Microsoft in his draft. So that's what we got for the stock draft. Man, they really, wow, Hoodie 108. Did they really do a head fake? Did they really do a head fake for the first 20 minutes? Do they really do that, bro? Grab back above 5. Dude, I've been buying shares at freaking 538 this whole week. Finally got below $5. And we got that 488. This is what, like, you know, when you see these like investors say the market is irrational, there's irrational opportunities. This today, again, I don't even know if this pump will continue or if we actually made an intraday bottom or what happens later in the day. But this is what people mean by saying the market's irrational. I've been buying Grab at above 530 every day this entire week. You're telling me because of random algorithms from market makers, I got a shot to get 1,000 shares at 488, which I think is a steal because that's almost 60% cash that the stock is trading at. I've been buying it, trading at closer to 40% cash. Right? But like, it's irrational. I got those 1,000 shares. They're booked. They're in at 488. It's just like, you could buy Hoodie at 101 today. Really? After those earnings, you got a chance to buy it at 101 just because? Like, unbelievable amounts of irrationality in the market. This is also why it's gut-wrenching to be an investor, right? Because you got to go through the ups and downs and you're angry and you're sad and it feels like someone's ripping out your heart and it's like you're annoyed and it's like, oh, but like, this is what you have to go through to be an investor. This is what you have to go. And it could dump in the next 10 minutes again. But like, this is why investing is so hard. This is why people are so scared to do it. And the types of emotions that everyone just went through in the past 30 minutes is why this community is so special, because A, if you can experience this with a community, it makes it easier to digest. But B, if you have the stomach for this, you are in a different class of human beings, because most people don't have the stomach for this, which is why a majority of the world doesn't do this. So whether you have a 100,000 portfolio, $1 million portfolio, a $1,000 portfolio, this is the name of the game. It is a very hard thing, but managing the emotions and dealing with it is just such a vital part of being an investor. Robinhood 109. We got 109, and then Palantir. She's trying to go for 161. Yeah, group hug. We need to do a 8,000 person group hug. That's what we need to do. We need to do a group hug. Palantir right here, 160.71. Robinhood 109. Grab at 503. eBay's up 15%. I think that's the best day in 10 years. Can someone check on that? I think that's like one of their best days ever. Amazon 233. Google is recovering a little bit, still down on the day, but it's recovering. And then NVIDIA trying to get to 182. Figma will be trading in a couple of hours. Robinhood, it got to 109, got hit right at 109, but it looks like it's trying to get above it. 108.2 is what you got on Robinhood. Is Hims still above 70? Hims just getting hit below 70. 69.83 on HIMS. Really wonder what the algos are thinking today. I mean, it might just be random, but quite frankly, Amazon and Microsoft and Meta putting up that move, it kind of makes sense that the algos would be crazy today because Microsoft and Meta surprised the market to such an extent. I think a lot of the algos were caught off guard. You might have had a lot of market makers that were like super short, not like actually shorting Microsoft, but they're making a certain strategic bet. They probably have a long position. They're hedging it with like maybe some short puts expiring tomorrow. And maybe those short puts are underwater. So now they need to tank some other stocks to be able to do whatever they need. I mean, these market makers work in coordination with each other. I talked with an investor yesterday at Altimeter. I'll tell you more about that later. And, she told me like hedge funds call each other. They like all those conspiracy theories we talk about. They're very real. They're very real based on the conversation I had. And I'll talk more about it. But these guys talk to each other, just like retail talks to each other. The hedge funds talk to each other. The difference is the hedge funds have billions of dollars they can use to manipulate different positions. And you never know. Maybe that was kind of going on in the morning after Microsoft and Meta put up those numbers. Apple right here, 208. That's down a little bit. UNH, wow. UNH dumping. Down 3%. Dumping. Chicago PMI comes in at 47.1 versus 41.9. Okay, hold on. That's really good. Is that the reason? Did that come out 5 minutes ago? I think it did. Chicago PMI, that could be. Now, how much does the market care about Chicago PMI is the question. But 47 versus 41 is a pretty decent beat when it comes to PMI. I mean, that could be your reason. So, did Figma announce? Did they announce the allocation? You guys are saying you got shares? All right, let me see. Did they give me a notification? How many did I get? I don't have my allocation yet. I should be getting a notification soon. Everyone should be getting a notification soon, at least on Robinhood. Someone said I got 1 share. Someone said I got 15 shares. YLO, thank you for the $20 super chat. We got this, Amit. Thank you for all you do. Thank you for being here, sir. And thank you for being part of the channel. And again, it's every day. It's a community effort. It really is a community effort. Pounds right here, 160. Robinhood, 107.12. Amazon, 234. Microsoft, 538. We're getting a little bit of a red candle from the intraday highs. Grab back to 505. HIMS at 69.83. SMCI, 62. And App Lovin' still up 8% on the day. So you're seeing a lot of red candles across the board from some of the highs that we were at. Figma, you guys can let me know how much you got, but it should be coming out soon. Got 17 shares, got 1 share. I requested 75. I doubt I'm going to get a ton, but we're going to see. I got 23. Wow, dude, 23 out of 125 is not bad. 23 is a decent amount. That is not horrible. Nancy Pelosi's on speed dial. Dude, Nancy Pelosi. I mean, we'll talk about her, but she is now in favor of banning stock trading for investors. I wonder why. Maybe she's retiring. But yeah, dude, Nancy Pelosi's on call. Dude, I'm telling you, the hedge fund thing is very real. I was talking to one of the analysts at Grab, by the way, 510 right here. I was talking to one of the analysts yesterday at the Hood event as well. And he said he was one of the most bullish analysts on Wall Street at what was it? At like freaking $8, $10. He said, this is why I'm telling the conversations I had yesterday were eye-opening. He said, I cannot make this up, guys. He said, I would get calls by hedge funds in 2022 telling me, persuading me to write a short report or lower my buy target to a sell target on Robinhood, even though the stock was down 80%, because they wanted to short the stock. And I'm like, so what did you do when they had these phone calls? He was like, I told them to go F themselves because I believe in Robinhood. Now, that's a stand-up analyst. That's a stand-up guy. A lot of these people, if there's money under the table or the hedge fund buys more research from the fund because you write the short report, yada, yada. I mean, like, people have their own motivations. Thankfully, this guy was one of those guys who's like not worried about a quick money grab. He's worried about his reputation and, Hood at $6, he's not going to downgrade it to $4, right? But these hedge funds that are shorting Hood at $6 because they're even more greedy to make more money. They call up all of the equity research sell side reports and they say, hey, give it a sell. And they try to convince them. It's a dirty game, bro. It's a dirty freaking game. Some of these conversations yesterday, I could not believe it, but like, it is what it is. And, in the morning when the algos were dumping, maybe there was a ton of different things going on that we just don't know about. Tesla, where is Tessie? Tesla right here, 317. So Tesla's down. You are seeing red candles across the board. So although we got a bit of a pump, you are seeing a little bit more red candles. I did not get my allocation yet for Figma.
Some of you guys are getting, Dax got 67 shares. That's not bad. I mean, some of you guys are getting 20, 30 shares. A lot of you guys got 1 share. I didn't get my notification yet. I should be getting it soon. And then we'll see how many I got. Bro, I got 1 share. WTF. Yeah, they're probably not going to give a ton. Vlad's on Bloomberg. Okay, let me see if I can switch over to him. And then we should get more of the Figma allocation. I think IPO's at 11:30. I think at 11:30. Yeah, at 11:30. So everyone should get the allocation very soon, and then we should know what's going on. Wow, what a vibe shift, dude. What a vibe shift. First 30 seconds, it's just like, hey, everything sucks. And, you know, now you got things just magically coming back. It is incredible. And the reason it was annoying is because a lot of these names just didn't deserve. Like there was no fundamental reason. At least I didn't see a fundamental reason. And so that's why I think you're seeing a different bit of a change. Okay, I don't see Vlad on Bloomberg. I'll try to get a different video of him, but I don't see him on that feed yet. He was on CNBC this morning. We checked Carvana, by the way. Jim Chanos is shorting this stock. This stock is up 22%, guys. It's at $400. I mean, my goodness, dude. My goodness on Carvana. Like, Chanos is short MicroStrategy and Carvana. He blew up the fund shorting Tesla 10 years ago. That didn't work. You just have some people that are stubborn. They're stubborn. There's some people on Wall Street that just think the same, but they're stubborn. They see a business in one way. They think it has to go down. You got to have a lot of balls to be a short seller to believe you're right against the entire market and that it's like, no. Sometimes that doesn't work out. Sometimes it doesn't work out. Alex, thanks for the $10 super chat. It's amazing how feelings can turn around. The stock market is the best roller coaster out there. It is amazing how things happen, and the stock market absolutely is the best roller coaster. Hoodie 106. So we had 109. That came down to 106. Is there a real difference between 106 and 109 in the past 5 minutes? No. Again, this is a classic day in the stock market of algorithms going back and forth. And I don't know what the algos are going to let us close at. Maybe we dump at the close. Maybe we pump in the close. But you got a lot of stuff going on, it seems like, with these algos. Hims right here, just below 70. Microsoft 536, and then Palantir holding 160. Not 161 yet, but Palantir hasn't held 160 since last Friday. So holding 160. I got, how many did I get? I got, guys, let's see. How many did I get? I got, wait, how many did I get? Wait, how many did I get? How many did I get? I got 1 share. Okay. Robinhood did this fancy freaking animation, and then the animation ends with me getting 1 share. Well, there you go. There you go. Your boy got 1 share. So thanks, Robinhood. Appreciate it. We got 1 share. I got 1 share out of 2,500. This is what I was saying, bro. All of you guys were spamming Figma in the morning, and I'm like, in my head, I'm like, no one's getting any shares. Like, you're very lucky if you got, this is just too oversubscribed. It's too oversubscribed. And I'm excited for Figma, but I can't participate in it. Now, the question is, when Figma goes public, let's say it goes public at from 33 to 45. Do you buy at 45? That's the question, because it's going to 90. My answer, what I'm going to do at least, is no, I'm not touching it. I'm sorry. I'm just not, I'm just like, call me scared or whatever. I don't care. I'm just like, I'm not touching that. It's the market's going to do the market. Maybe it pulls a circle. Maybe it doesn't. I'm not chasing it. But if anyone does want to chase it, I mean, who knows? Maybe the momentum is there. Maybe it's not. But we're going to have to see when that one ends up going public. Bro on stream saying, I'm going to flip this IPO. Hood. Okay, say less. Flip 1 share. Yeah, exactly. They heard me saying I'm going to flip the IPO. You can buy more at the opening. It just might be expensive. It just, it might be expensive. So there you go. We're going to see. We're going to see how that one ultimately goes public. Hims right here, 69. All right, so you're getting some sell-offs. SoFi holding strong, dude. You can't be upset if you're a SoFi investor. After that earnings and then the crappy dilution, which at the end of the day, if they're using it to build out a company, it's not that crappy. Maybe the timing's crappy, the feeling's crappy, but it's not a crappy offering in and of itself. You can't be that upset if you're in SoFi. That stock right here up 7.7%. I got 23 shares. Yeah, if you got more than 1 share, consider yourself lucky in the lottery, because a lot of people didn't. Did you see ALGN yesterday? I did not. ALGN, Align Technology. Wow. What does Align Technology do? Are they medical devices? 30%. Orthodontics company. American manufacturer of 3D digital scanners and Invisalign clear aligners. Okay, so it is a medical tech. How bad were these earnings, bro? Holy crap. 30% down. Oklo's at 78. Yeah, Oklo just, again, this company does no revenue. I don't even think they have a working product, but nuclear energy, dude. Like, honestly, Oklo pumping in February should have been a sign for us as investors to realize it's not just a meme stock, or it's not, this AI stuff is not meme-ish. The fact that Oklo was catching a bid, because there was no like retail Oklo community, like there's an open door thing, right? It was more so people just betting Meta's going to spend so much money on AI and they're going to need energy. And there's just not a lot of companies that are doing energy. And Oklo is the only, not the only, but one of the only major, Applied Digital, by the way, up 40%, nuclear companies that's out there. And as a result, you know, they'll grow into the valuation. Like that should have been a sign to everybody. But I read that wrong. I thought of that as froth and I was dead wrong. It's not froth. It's so much demand and the market has no idea what to do, but allocate into opportunities that can capitalize on that demand. And so that's what you got. TMDX, yeah, they had good earnings as well. TMDX had a good earnings. In 5 minutes, we will have Devin Ryan, who is one of the OG analysts on Robinhood, join. We will get his take and his thesis on the earnings that we got yesterday from Hoodie. I'll also ask him about SoFi because he has started coverage on SoFi as well. And so we will see what he has to say. Mike Wilson was on today. This guy was bearish for 2 years. He turned bullish. Let's get his thoughts real quick and see how he's thinking of the broader market and the earnings landscape.
You know, earnings revision breath is a V-shaped recovery. Okay. So in other words, companies are dealing with what's going on right now. Does that mean it's going to continue to be at this pace? We don't know, but that's a good leading indicator for what earnings are going to be doing over the next 6 to 12 months.
And the reason you think it is not affecting margins to this point, and it won't affect margins from here, I guess, is the bigger question.
Well, I think the bigger point is that in the first quarter, earnings revision breath was terrible. We were talking about that. There was a function of a bunch of different things. And then tariffs, the threat of tariffs and around Liberation Week is when the revisions literally plummeted. So what's going on now is you're just getting a reflexive move off of those lows. And I think people are looking backwards on this issue and the markets are already past it. Does that mean that tariffs are not going to affect trade? They're not going to affect, GDP growth and things like that? Of course it is. But the market has already discounted all that in the first quarter for the most part. Now we've discounted a lot of recovery. So that's probably the bigger risk now is that the stock market is once again trading ahead of the average person and they figured this out. So could we have a pause in here, some kind of third quarter? Sure. But I'm getting more confident that our earnings numbers are probably too low now for 2026.
And that's the reason you think that this is not your average run. You've actually, I think, what is it, 7,400? You think that the S&P could get to? It's a gain of more than 12% from here over the next 12 months.
That's right. 7,200 has been our bull case, and what we said recently, and what we said recently is that we're leaning more towards that case because that's an earnings story. Yeah. And that was our call 6 months ago as we laid this out. We said, look, the first half's going to be tough. They're going to kitchen sink it. They're going to do all the negative growth stuff, and then they're going to flip the switch. They just did that faster and more violently than we expected. So now that second half story is playing out even quicker. But it gives us more confidence that the earnings story looks pretty good on 2026.
I mean, you look at the Mag 7 effect on the S&P, doesn't it have the same effect on overall on earnings? It must have an outsized effect.
Absolutely.
And is AI started with what we saw from Meta and Microsoft and others? Is it happening faster than we thought? And you could boost 2026 earnings estimates based on AI catching fire even more than it is, couldn't you?
This is probably 50% of our view for next year, which is that, I mean, the big mega cap companies are actually the most facile. They know how to use this data better than anybody, right? So let's just take a look at last night. We have these companies growing 20% top line, and they're cutting employees, right? So that's a sort of a premonition to what could happen next year.
And it's like numbers that you look at, that's what I said. Mark Zuckerberg, he was at Harvard, like screwing around, and their revenue in a quarter is like, I forget what it was like 40 billion. Yeah, it's mind-boggling, and they made $18 billion of profit.
Yeah, now they're not generating. I mean, they are generating. I think that's probably a good example where they are generating a higher ROI, but we're not seeing a huge revenue impact yet. This is still a cost-cutting efficiency technology. But the big exciting part for next year is can we see that technology now diffused into the broader economy?
Well, this is what I was going to ask you. You said the big guys can handle this. What about smaller companies? Because small businesses make up the majority of employee growth in this country. So,
and that's why we've been less bullish on the smaller names, because they don't have the scale. They also don't have the ability to mitigate some of these tariff issues because they don't have the supply chains, sort of locked down. But I'm getting more optimistic that maybe we could see solutions pushed out to a wider group of companies. That's probably a fourth quarter call, first quarter call. And the other variable, of course, is the Fed, who remains on hold. And that also, higher rates is a headwind for the smaller businesses.
It is a bit of a headwind. By the way, guys, Devin Ryan will be here in 10 minutes at 10:30. I thought it was 10:20, but he'll be here at 10:30. Let's switch from him to the ARM CEO. ARM is getting nuked right now. Not sure why. Let's try to get a little bit of an understanding of why these shares are getting hit.
We're super proud of that. Royalties were up 25% year on year. That's terrific. We've got new CSS licenses. We signed 3 brand new ones. Those are our compute subsystems. Those drive higher royalty rates. And we now have 5 customers in production there. So that's great too. And also, based upon all that momentum, we project by sometime towards the end of the year, ARM's market share in CPUs and data centers will be about 50%. So a great quarter.
Now, let's talk about ubiquity.
Okay, so the audio is a little hard to hear there, but I think the reason they got hit is guidance. I will go deeper into their earnings later and see. Did they miss on the top and the bottom? Let me see if they did. ARM is always traded at a pretty aggressive multiple, so it's not crazy to think the street was like, hey, this is a little bit too much for us to pay. By the way, Ferrari is down 9%, ticker symbol RACE. They missed revenue by 5%. They missed revenue by 5%. EPS, they came in line. Ferrari, ticker symbol RACE, it's down 10%. ARM 200 PE. Yeah, dude, ARM, the saddest thing about ARM, SoftBank owned 5% of NVIDIA. They sold it for $3 billion. That stake would be worth $160 billion today if they just held on. They sold it in 2019. Now they own 90% of ARM, and Masa-san, the guy who runs SoftBank, has publicly said he's trying to make ARM his next NVIDIA. I don't know if holding up 90% of the float is going to be able to make that happen. ARM also is just not the same company as NVIDIA. But yeah, that one has not been the best investment for SoftBank. I mean, they did well on it, but NVIDIA, they could have made $160 billion, So that's why ARM has always had a squeezy float, but it's because SoftBank holds all the shares and eventually they're going to dump it one day. But ARM's not putting up that much crazy growth to dump it in the open markets. NVIDIA right here, 181. CoreWeave's up 11%. Amazon's up 1.2. Lemonade, a little bit of a move, up 5% right here. SMR, that's up 5%. Sharplink Gaming, that's up 2.4. SMCI is up 2.3. And then Bitmine, Tom Lee's fund, that is up about 4%. That is up about 4%. Thoughts on coin earnings after hours today? I didn't even know coin was after hours today. Let me check the companies that are after hours, folks. We got Apple, Amazon. I knew about those. Oh, wow. We have MicroStrategy. We have Reddit. We have Roku. We have First Solar. We have Coinbase. And we have Cloudflare. So Steve will probably join at like 4:40 because I'm going to have a lot of work to do covering those earnings, which is probably good for Steve because his meeting should be done by then. And then he'll hop on and we'll discuss Meta and Microsoft. I'm still enamored by Meta. Dude, how many people put in the chat if you own Meta and Microsoft? Like, I know everyone was annoyed this morning because a lot of weird stuff was happening at the opening bell. But if you own Microsoft or Meta, you've got to be like over the moon today. You literally got to be one of the happiest shareholders ever. Forget even the stock. The stocks are doing well, but just the sheer earnings they put up was insane. Cloudflare is up 4% as well. And then Arista, ANET, that is also up 2.5. Yeah, I know a lot of you guys have Meta. A lot of you guys have Meta. You have to have a lot of Meta. Amit, why are grab shares not ADRs? Because they trade on the NASDAQ. They went public on the NASDAQ. That's another reason I like them. You're not buying an American depository receipt of a share. You're buying like an actual share. That's always the risk with some of these international companies. But Grab is, primarily in Southeast Asia, but they are in the United States. They went public in the United States. So guys, I'll just tell you guys the story real quick. So Altimeter is one of the companies that took Grab public. Brad Gerstner, he took Grab public. And so I was having dinner last night with one of the Altimeter investors. Again, I'll talk more about it later, but she was one of the main people that pitched Brad on Hood. And the reason she wanted to get food and dinner is because she saw some of my content talking about Hood about a year ago. And so she just wanted to connect. They sold all their Grab a long time ago. And she was asking me, hey, Amit, what's your next hood? And I was like, well, there's this company, not the next hood, obviously, but I was like, the real company that I'm deeply attached to right now is Grab. And she started smiling. She was like, we have a history with that company. I was like, I know you guys have a history with that company. And then she was like, it's really hard to get back into a name after you sell it and this and that. And I was like, look, I'll tell you my thesis, and then you have to do your own research and see if you like it. But by the end of that call, she was like, I'm going to look into it again. I'm going to look into it again. And she was like, if this thing goes to 10 and we sold at 5, because they sold because it was just like, it was 2021, market had popped, and they were like, you know what, we could take this money and do it. And it was the right move because Grab's been dead money for the past couple of years. But she was like, if this shit goes to 10 after we were the ones who took it public and we don't have an equity stake, we would be really pissed. I was like, yeah, you would be, right? So you gotta look into it. They sold because it IPO'd at 15 and then fell to $5. And so as a professional money managing fund, they have to make hard decisions. And sometimes you got to cut bait with something that's not working. And they allocated that capital to other places like NVIDIA, other stuff, right? So yeah, I mean, ultimately, I just learned a lot more about the money management business yesterday. It was a really, really interesting conversation because I got to ask them who actually buys the stock. Like, who buys it, right? Like, I was like, so does Brad Gerstner have like a button that he presses when he wants to buy a couple million shares of Robinhood? And she started laughing. She's like, no, we have this guy. We tell the guy to tell Morgan Stanley. Then the guy at Morgan Stanley ends up executing it. And I was like, okay. Because I just like when you're a fund manager and you want to buy, like, what do? You just like take out your phone and press it. Like, it was such an interesting conversation. We were at Harry's Steakhouse in New York. We had Harry's Steakhouse. I ordered a really nice steak because it was not on me. She's like, it's on Brad. I was like, all right, if it's on Brad, I'm ordering a good steak. I got it medium well. You know, I tried medium rare a couple weeks ago at Texas Roadhouse. It was okay. I went back to my roots and I got medium well last night. I don't care what you guys say. I forgot to text this to Steve last night. I'll tell him about it on the show. This is the actual answer, bro. This is the actual answer. Medium well is the answer. I'm sorry, but it just is. It just is. Medium well is the answer. Look at that. Medium well is the answer. Don't tell me medium rare is better. I don't want to hear it. I don't want to hear it. Medium well is the answer. I don't care. I don't care what you guys. I don't care what you guys. I tried medium rare at Texas Roadhouse a couple weeks ago. It was okay. It just wasn't the best. I was like, eh. And so I moved on with my life. I went back to my roots. I went back to what matters. And I'm very happy that I went to medium well. Here's the update on Chicago PMI. It looks like that is what's getting the market to be. Let's pull this up again. 47 versus 41. So that was a big beat.
Well, this is an odd one. 47.1 is our July read from MNI on the Chicago PMI. Manufacturing, much better than expected, but still under 50. 47.1 would be the best since March. But here's the issue. It's the 20th consecutive number under 50 in contraction mode. It's the 34th out of 35 under 50. The last time we had over 50 was November of 23, but prior to that, the entire year was under 50. So it's definitely a weak number in general, but it's a strong number today.
He's right about that. It's a consecutive month of contraction, but the fact that it beat estimates is really what matters, right? Ultimately, from a market perception perspective. And that is why we got some momentum there on Chicago PMI. And potentially that is helping the broader market. All right, folks, let's bring on a guest to the show. This is the first time they are joining my show. I am very honored that they took the time out of their busy life to get on the show and talk with all of us about some of the stocks that we deeply care about. This was an analyst who has been covering Robinhood since IPO, and he kind of doubled down on his thesis when the stock was in the dog days of the bear market in 2022. He stayed strong. He believed in it. And that call has worked out quite well for him. Ladies and gentlemen, Mr. Devin Ryan. Devin, thanks for being here.
Good to see you. Fun catching up last night, but good to be on your show.
Yeah, it was great catching up last night. It was awesome doing the earnings call and experience. Before we get into everything, what was that like? Was this your first like in-person earnings call with the company?
Yeah, it was. And it's funny, like earnings are normally kind of this chaotic moment because numbers are hitting, and I'm sure even for you, but numbers are hitting. We're getting emails from clients like, hey, what does this number mean? We're trying to get the numbers in the models, trying to get dialed into the call, get questions that are relevant for the call. And sometimes there's 2 or 3 happening at the same time as you're trying to figure out, which one to focus on. And so, it actually kind of took some of that chaos out, because we were all kind of forced to walk over to the NASDAQ site. And, so it was a little bit calmer. And I think it actually made the conversation more kind of long-term focused, especially the people in the room, just because we didn't have everything in front of us kind of data real time. So it was good.
Yeah, it was a bit hectic for me because I was doing my live stream and I had to walk over. So I had to leave the WeWork, make sure I got there on time. It's hot outside. So it's all hectic, but I think it was.
Yeah, it was the same. Yeah, I was racing over from my office.
It was a pretty incredible experience. So I saw your report this morning. You issued a new price target upgrade of $130. I'll give the floor to you. What was your take on those earnings yesterday?
Yeah, earnings were fantastic. So obviously, this has been kind of just a story that's been evolving over not just 1 or 2 quarters, but we go back and we've known this team since prior to being public. I've covered the brokerage space for 20 years. So my kind of experience is looking at financial services from 20 years ago and kind of how they've evolved, and then how these fintech firms are coming and in some cases disintermediating them, in some cases doing some of the same things. But Robinhood from the beginning has always been in our mind, and even in their kind of ethos, is democratizing finance for all. That's not just trading, but that's really all facets of financial services. And so, what we're seeing now is some of these other legs of the stool really starting to kick in, and I think that's what's exciting. The market's waking up to that, but really, I think we're just getting going. As you heard last night, they've got 9 businesses with over $100 million in ARR. They've got a number that are kind of 50 to 100 million. And then what's exciting to me is that this is the tip of the spear. I mean, we are really at the front end of innovation, where you think about tokenization and what that can mean for them. I think multi-billions of dollars of revenues over the next 5 to 10 years. Just getting into banking. So a lot of these areas aren't even in the model yet. Liked earnings, really good, but I think even more importantly, the trajectory here is everything that we've been thinking about for the last 5 years, and they're just executing at an incredibly high level. And the last point I'll make is they're growing at the rate they're growing, but they're doing it incredibly profitably. And I think that's what's different, right? When they came public, it wasn't profitable, so people are trying to underwrite how much money can this company make. You had some of the cynics that are saying they'll never make money, and now they're operating with their EBITDA margins were 56%. In the quarter, which is like off the charts, particularly for a company that's growing like they're growing. For a mature company, that's still phenomenal. But for a company that's growing at 40, 50%, that's really off the charts. And what Jason said, their CFO, last night to my question is that we're going to continue to find areas where we can save costs and reinvest them back. And so we think, effectively, if you take that algorithm, that means that margins probably still move higher from here. Again, not on a straight line, but that's pretty incredible for a company that a few years ago wasn't even profitable, and now they're up there with the big boys in the north of 50% range.
I think that's the most exciting thing. The biggest thing I hear from everyone when it comes to Robinhood, retail or institutional, is execution. Like almost unanimously, everyone has agreed that the company is executed at a level that is hard to comprehend, primarily because of what you said. They are growing top line 40, 50%. They're buying back shares, which is something mature companies do.
Yeah.
They're bringing 40 cents of every dollar to the bottom line, and they're increasing operating leverage. So it's an incredible story. Let's talk valuation. Valuation's up there. It started to get up there. You guys increased your price target. How are you thinking of 130 from a valuation perspective? And what is kind of your response to some of the cynics that say, dude, we love Robinhood, we love the execution, but this valuation is getting out of hand?
Yeah. So I've done this a long time. And one thing that I found is that people have a really hard time modeling innovation, right? So how do you model what you don't know exactly how it maps out? So how do I model tokenization where, a year ago, most people, you couldn't even answer what is tokenization, right? And even today, I think a lot of people struggle with what does tokenization look like? So when I think about Robinhood, first off, I think you can support it just based off of the growth that they're putting up right now. So our $130 target implies about 35 times 2026 EBITDA.
Right.
The stock's trading about 30 times our 2026 EBITDA right now. Now, I am way above the street. So I think there's a lot of aspects here where numbers can move higher. But even in our model, we're not reflecting huge contribution from all these other crypto pieces. We're not really modeling anything from the banking offering, which they're launching later this year. And so I think you have to factor that into your framework. And so the way I've been kind of framing this out for people, not to be redundant, but we wrote this in our report, is if you zoom out, and I like to do this, let's map out where this company's going over the next 5 to 10 years. And they're very clear that they think they can 10x their revenues by 2035 effectively. And I believe that. I actually think they can do more than that. But if you just map that out and go from the $3 billion they did last year to $30 billion, and by the way, the addressable market right now is over $600 billion. That's going to grow, and the addressable market's going to expand as they add more legs to the stool. But you take that type of kind of math, and you go 10x to $30 billion of revenues, put some reasonable margins on that, and you get to $15 to $20 of EPS in 10 years. So put a multiple on that, discount it back, but I think that's a north of a $500 stock. So you're buying, and again, you have to discount it back, so you're not paying. You don't want to pay $500 today, but you're buying the stock at roughly $100, and you can 5x is what I'm saying between now and 2035 if they progress as I think they will. And again, I think there's actually going to be more innovation here that could kind of make that upside even more. That's a really compelling opportunity. So that's the way we try to think about it. Now, we're in a very healthy market. People are engaged. People are willing to kind of look out. What happens is you go back just even a couple months, go back to April, and everybody gets very short-term focused. The stock was like, what's going to happen this quarter? Everyone's thinking about all the bad things that are going on in the market and bad things that could happen. So I would argue that this is a balance. And right now we're maybe, in an environment where people are willing to kind of dream the dream. And so the risk is that there's some macro shock or just something happens that brings people a little bit closer term in terms of their focus. But that doesn't change my view. If they continue to execute, that doesn't change my view of this being a $500 plus stock. So when the stock got down to 30 in April, we were getting really excited. We told all of our clients, you have to really lean in here because this is a generational company that you're buying at $30 that still will be $500, in probably less than 10 years. And so that's
what is that meeting like when they call you and say, Devin, bro, it's at $30, and you're like, bro, it's at $30. How do you convince those clients that this is something to be happy about versus upset about?
Yeah. So, every client's different. And the institutional investors, what's been fun actually seeing retail do so well over the last 5 years, where I think that, people like you that are kind of constantly giving information and helping the psychology of retail has been, I think, really important, where people in the retail market feel like, hey, when you get these big sell-offs, these are opportunities. Whereas in the institutional community, what happens a lot of times is, a lot of the hedge funds run on leverage. And so when market turmoil accelerates, they have to collapse their books. So they're generally selling their longs, they're closing out their shorts, and they're just getting to neutral on their book. And so they may realize that, hey, there's value here, but just the way they manage their strategy, they can't necessarily participate. So there's a lot of that happens. That's also part of why you get these kind of extreme sell-offs. Then the flip side is there are a lot of institutions that call saying, hey, Devin, what should we put on our buying list right now? Maybe we don't have a lot of dry powder at the moment, but when we do, what do we buy? And so I get all of those types of calls. And then, there's always going to be people that, there's a recency bias in the market. You had analysts downgrading companies like Robinhood at the lows because they were concerned about tariffs. And I'm saying the opposite of that, saying, listen, yes, I know there could be volatility. Yes, the environment could get worse. But if you just think about what your long-term opportunity is here, it's actually more compelling today than it was 2 months ago when the stock was at 65, which was the high prior to it selling off.
So your argument against cyclicality is, sure, it might be cyclical up and down, but long term, this thing is a compounder led by that execution and ultimately that operating leverage.
Yes, that I do argue that, but also I think you have to, it can't just be a call on cyclicality and we're trying to time this. We have to have, and I've always felt like I've had to have something else differentiated in my call to really create alpha for our clients. So it can't just be ride the tide of rates are going up, go buy this. You can make money on that, but what else do you have that's either non-consensus or, if I look out a couple of years, people aren't thinking this way yet, and I can convince them. And when that starts to become obvious to the market, you get alpha in that. So sometimes because of that, I tend to be a little bit early on our calls, but a lot of times, I think we kind of make these calls that are these bigger picture. Here's where we're going over the next 3 to 5 years, and this is my vision. And so the cyclicality, you have to play around that. And we, do talk to clients that are, week by week or even month by month. And so we're helping them navigate that. And even for Robinhood, you came into a quarter where clearly the bar is high. It was kind of like whatever they put up, I wouldn't be surprised if we see a little bit of sell-off, and that wouldn't be unhealthy. It would just mean that people are taking a little bit of profits, and there's also algos and other kind of participants in the market that people aren't always as focused on. But that doesn't really take away from the long-term story. I'm focused on the execution of the management team, and you talked about. I mean, they're executing from a high level, top down, but it's the small things too. They have a great investor relations team. They're very transparent. The way they talk on the calls, I think everything is very methodical, and so they're not just saying things; they're actually giving information that they think is important and packaging it in a way that people can digest. And that's very important for institutional investors that are covering 200 companies, and they need to figure out, which ones do I focus on? Give me a simple algorithm to think about when the stock is attractively valued, and I can lean in when that happens.
Yeah, and it seems like also those generational investments, they have to have a big picture. Like, it's very hard to be bullish on a stock down 80% because of some cyclical timing. It's more so, hey, there's a big picture here. There's a undervaluation asymmetry. If the thesis plays out, this is a massive, massive opportunity. Last question on Robinhood, and then I just want to get your quick thoughts on SoFi.
Sure.
Banking in September. I think it's a pretty big deal because once you've got direct deposits hooked up with people's jobs, that's a very steady flow of net deposits. How are you thinking of banking as a tailwind for the business?
Yeah, well, I think it's just it's kind of the beginning of something much bigger. So as you think about getting into banking and then all the other ancillary types of banking products, that's where you start really expanding the TAM of financial services, right? Credit cards are already in, but just all the other types of banking products. And so I completely agree with your point. Once you have the direct deposit, you've got that daily relationship, and something that Robinhood has done well, because the thesis of like a neobank and being the one-stop shop, and I know we'll talk about SoFi, that's been out there for a long time. I mean, the banks 20 years ago, I've covered banks for 20 years. They all had a thesis of, we're going to be the supermarket to the customer and give them all the different products. The challenge is the silos and the tech debt and the delivery mechanism to do it where the unit economics make sense. And so what Robinhood has done really well is they've kind of met the customer where they are, but on top of that, they've found ways to connect with customers on a daily basis. So trading, maybe it's not a daily, customers aren't necessarily all trading daily, but it's a very frequent touch point. So they're very integrated with the experience of Robinhood, whereas some other quote unquote neobanks that are interacting and providing a loan, you give the loan, and then of course the individual may log on once a month and pay that loan, or maybe set up auto pay, but there's not a daily connectivity point. And so that's really important, that like Robinhood becomes your daily financial app where you're going to it for everything. And I think that banking is just an obvious kind of extension of that. And from a TAM perspective, opens up, obviously tens of billions of dollars of revenues, if not, quite a bit more in terms of opportunity.
Yeah, I think the user engagement with Robinhood, as you said in your note this morning, is so sticky from a UI UX perspective. So introducing banking, which is something everyone needs, I mean, that I think really can be a massive tailwind going into the future as well. SoFi. So saw your report a couple of days ago. You said the earnings blew away your expectations, was better than what anyone could have asked for, but you don't have a price target yet. So how are you thinking of valuing SoFi, the business, from a price perspective? And then ultimately, how do you think they did in earnings?
Yeah, so we formally launched on SoFi in late April, and the stock was at $12. I've also known them for quite some time, before being public. We had some meetings with them, and then they've obviously had a successful kind of public journey in terms of growth and getting to profitability similar to Robinhood. But we launched on it in late April, formally at $12. The stock went from $12 in 2.5 months to $21. And when we launched, we felt like we had going back to my earlier comment, we felt like we had a differentiated call. There was aspects here that people were being way too negative on. We also felt like people were too negative on the economy as well. And so that was creating some opportunity, because there is an economic aspect to SoFi around, they have to continue to drive origination volumes to drive kind of that earnings acceleration. And so we felt like there was kind of a number of both macro and company specific aspects that at $12, you're getting massive optionality on. When we made the argument, we said this fair value is probably low to mid 20s on this company. And the view there was similar. We just walked through with Robinhood. We thought they could triple their revenues by 2030. So going from $3 billion in 2024 to about $9 billion by 2030, and you put some margin expansion on that, and you get to about $1.75 or even higher in EPS. Right. And so you put a multiple on that, and you discount that back at a low double-digit discount rate, and that got us into the mid $20 fair value. So the stock literally went from 2.5 months, $12 to virtually a double into that low to mid $20 range. We said, okay, this is kind of in the fair value zone. However, we acknowledge that this company is growing like a weed. There's still aspects here that people are probably still too negative on. And so we're going to continue to evaluate here. Now, when we downgrade a company from an outperform, which is what it was, to a market perform, we remove the price target. So it's simple. It's not that we maintain this old price target. It's that we don't have a price target. So market perform is still saying, hey, this company can do well. Right. But if I were to put a new dollar to work, maybe I would look somewhere else just for now. And so right now our view is we're probably consolidating a little bit in the stock. And listen, the quarter was great, and they did beat. We knew it would be good. It was even better. The loan platform business is going to be massive, and I think they're just scratching the surface of that. They're getting much more sophisticated around how they deliver that. They're lining up more pockets of capital, so they're going to have more volume to be able to push through those channels, and that's balance sheet light, which is going to help their valuation. And then expanding into some of these other balance sheet light areas like crypto and doing more in brokerage. I think those are going to be really important. And then the last piece is on their traditional kind of lending segments. Home lending, I think, is a big opportunity for them. That's going to improve as rates come down, but also they're just getting more sophisticated around how they go to market there. Relationship banking, where they get customers and move money over for a loan and give them a better rate. And so that's just getting going. So home lending is going to be a bigger piece for them. And then student lending is going to get some tailwinds from this a big, beautiful bill as well. So you'll see kind of a reacceleration there. So the bottom line is nothing really to pick at. It's more a function of, again, trying to think, what do we have this differentiated in our call? Where are people still way off sides? And when the stock was at $12, we had a lot. In the low to mid 20s, we felt like maybe we don't have as much, but the reality is we're going to continue to evaluate this. They do a big acquisition, which is possible with, they just did this capital raise. I think there's potential opportunities for them from there.
Does your thesis at all really care about the AWS of fintech, or are you more concerned about the banking side of it?
It does, actually. I think that's another huge potential light for them. I think that plays out longer. It's a chunkier relationship. This is the tech segment and their ability to really kind of integrate in with traditional banks and fintech across all their kind of banking and financial service needs and technology needs. And that's a massive TAM in and of itself, and it's separate. And I think it actually doesn't get enough credit. I think part of that is because it's been a little bit of a slower grower recently. I think as we get into next year, that will start to get people more excited, because I think some of these sales have really long lead times, but once you get them in, they're big and chunky. And they already alluded to a number of new clients coming on board in early 2026 that were not in 2025. So long-winded answer, we are bullish on that. I think that's a big addressable market in and of itself, and probably becomes more exciting in the story as we kind of exit this year into next year.
So broadly speaking, you think the Hoods, the SoFis of the world, these companies are coming after the incumbents, and that doesn't mean the incumbents are going to go anywhere. It just means there's a lot of market share for them to take. And if they can execute against their overall thesis, these could be pretty massive outperformers over the next decade.
Yeah, absolutely. So there's a lot of inertia in financial services, right? So people don't wake up in the morning generally saying, I need a new bank account, but over time they say, hey, there's a lot of value in this other offering, or now they're connecting all these other pieces. And that was interesting to me. And so I am going to move my money. And so I think what happens is, the banks have to raise their bar, and they have to deliver better for customers. And by the way, banks are all focused on this. So I think there's, still very good competition, and banks can grow. But then these other kind of neobanks that are branchless banks, part of the exciting part about, a Robinhood or SoFi is they can deliver these products to customers with very little kind of operating costs because they don't have the branches, they don't have all the people, they don't have all that fixed infrastructure. And so once you get to profitability, it becomes really scalable. And so that's what's happened at both Robinhood and SoFi. There's a lot of other neobanks that are saying, hey, we want to go after that opportunity, but they don't have the customers yet to be able to do it profitably. And so that's going to be really hard. But the fact that Robinhood and SoFi have already gotten there and gotten to profitability and are very profitable and have a lot of clients, SoFi well over 10 million, Robinhood 27 million. What happens is when you launch that next product for Robinhood, you launch the next product, your acquisition costs are virtually zero, right? So, it costs a couple $100 to acquire a credit card customer for a credit card company or, for a bank to bring in a new bank account. Robinhood's bringing them in for zero. So when you do that, what does that mean? It means you can deliver a lot more value back to the customer and still have the unit economics make sense. And then the cost to serve that customer, because you're doing it on a very modern tech stack, is low. So you get this like flywheel going. And so then the next product you launch is even better unit economics. And so you're just creating an opportunity where you're providing more value to the customer in terms of pricing, rate on cash, and at the same time, and obviously a good modern experience, but at the same time, you're dropping a lot of that profitability to the bottom line because the infrastructure is so scalable. So I think that's what this modern world of banking looks like. And again, the incumbent banks, there's a lot of really good ones that are doing some good things, but it's a massive addressable market. So there's definitely room for SoFi and Robinhood to grow by multiples before you would say these are mature companies.
Right. Devin Ryan, thank you. It's incredible work. You've had an incredible thesis. I remember being on YouTube in 2023, watching your interviews from CNBC when Robinhood was $8, because it was still $8 in 2023. And I'm like, this Devin Ryan guy sounds pretty damn smart. I think there's a thesis here. So it means a lot. My chat loves you. They got a lot of people in the chat right here saying this guy's awesome. Final personal question for you, because my chat tends to be excited about the guests that we bring onto the show, and you're a new guest, and hopefully we'll have you on many more times. What is it like being a sell side analyst? And just like, I know earnings season's got to be crazy, but what is that day-to-day like? And do you love what you do every day?
Yeah. So great question. I've done this for over 20 years, so I don't look that old, but I pretty much my entire career, I worked in equity sales for a couple of years, and then I started covering investment banks back, into the financial crisis, and then got a shot pretty early in my career to be a lead analyst. And so kind of ran with that. So I've been a lead analyst for virtually 20 years, but I think we were talking last night. I mean, it's a competitive world where, there's 20 other analysts, and I cover a lot of different stocks. So I cover probably stocks that 100 analysts cover in totality. And so, I wake up in the morning and it's like, how am I going to differentiate myself from these other 100 analysts? And what am I going to do that they're not doing? Or what report am I going to write that they're not, or what can I think about that maybe they're not thinking about around this company? And that's what our clients value. Our clients are talking to potentially a lot of those analysts, but you have to be able to really add value for clients to stand out. And so I'd say that's one point. The other point is, it can be a lot of work. So last night, we had I was up at 5:30 yesterday morning with 3 earnings and calls going out at the same time. You're juggling all that through the day. Raced over to Robinhood. Did that event, and then went home, and we worked till 1 a.m. to get our report out and get everything, model and everything updated, and then back in today at 5:45 and going again. And thankfully not a lot of earnings this morning, but then we have, after the close tonight, we have Coinbase and another one, and so 2 tomorrow. So like that's kind of the game. It's very nonstop. And then when you're not in earnings, it's going and seeing clients. It is thinking about research that people would be differentiated and proprietary, and can really be helpful. So we want to be in the middle of the big theme. So tokenization, I've been talking about for years. We've been writing research about it for 5 years, and so it's like now this is becoming something we want to make sure we're continuing that story. So we've got a lot of work around that we're putting out here. But that's really it. And then now the IPO calendar is reopening. So we have companies that we're talking to about going public. And so, there's a lot of exciting things going on. But I think it's really, to your question, you have to love it. I love the markets. If I'm not talking to clients, I'm actually like, what you put out, I love all that, all the content that I see. I'm on X, reading, getting news. I want to make sure that we're finger on the pulse, and then we can kind of put it all together, because I talk to the institutional investors as well. And so I know how people are positioned. I know where people are concerned about something. So I know that if I believe that, for example, a company's going to blow out a quarter and all of my clients going into that quarter are nervous about it, the stock's probably going to go up a lot. Whereas if everybody is excited about the quarter, even if they beat, that might not be enough. But I because I'm talking to everybody, and you have to be good analysts, you have to be in the flow of information. You have to know your numbers. And that's something, doing this a long time, I've never really handed that piece off. I always do my own models, can speak to all of our assumptions going out the next 10 years. And so I think that's important to be able to help clients, and also really be informed on the calls you're making.
I love it. Speaking of X, I mean, we post a lot of content on X, but this is a tweet from March of 2024 where I said Devin Ryan from JMP Securities reiterates a buy on Robinhood $25. So we really do pay attention to the equity analysts and what you guys are saying and reading your research, and we try to help it inform what retail's doing. And so it's just pretty incredible to see the synergy between this retail movement and the institutional guys. And when we can kind of come together on a name like a Hood, it's like, it's special, because be a generational company.
I love it. And keep up the great work that you're doing on your side. And let's do this again. I think there's a lot of other interesting companies to probably talk about that are kind of the next wave of maybe ones that are kind of going from losing money to profitable. And so probably for another day, because I have to hop here as well. But great to see you, and hopefully do it again soon.
Let's do it. Thank you, Devin. It was awesome seeing you yesterday. And we will definitely do this again. Appreciate it a lot.
See you soon. Thanks,
later. All right, folks, there you go. That was pretty awesome. I mean, first time we had a institutional equity analyst on the show, and boy, did he crush it in terms of explaining his thesis on Hood and SoFi. I think he really broke down kind of where he sees SoFi growth trajectory as well, and why there kind of isn't a price target there yet, but also did a really good job explaining why Hood has been such a generational company, and why their clients, they told them to double down on that tariff dip. And, ultimately where he sees the operating leverage coming from Hood. The major point he made about the ability for them to buy back their shares, increase their operating leverage, and still execute at the level they're executing at, that is, I think, been my thesis and been all of your guys' thesis when it comes to Hood, right? Like, can they execute profitably? And it seems like that is what they're doing. In terms of the markets, so we're going to have Jose join in about 2 minutes, and then we'll get his thoughts about what's going on in regards to Meta, Microsoft. SoFi right here is up a little bit. So we got that dump when the market opened. Robinhood to 101, Grab to 480. Everything was just crashing besides Microsoft and Hood, or Microsoft and Meta. And then we got a pump at 1020. And now we're not getting a dump, but we're not maintaining that pump. So Hood went from 109 to 106. Meta went from 785 to 775, still up. Grab went from 510 to 502. Hims was at 70. Now it's stuck below that. Palantir went from 160.3 to 158. The algos are playing with us today. The algos are absolutely playing with us today. And I think we're seeing a bunch of different price action go from a variety of different angles. By the way, you guys as a chat, you guys are just crazy. That's all I'm going to say. You guys are just crazy. That's all I'm going to say. I'm not going to say anything more than that. You guys already know what that means, but you guys are absolutely crazy. That's all I'm going to say. Anyway, Jose, what's up, man?
What's going on, brother? How's everything?
Dude, what did we see last night from Meta? Can you I'm going to give you the floor. What did we see from Meta and Microsoft last night?
I mean, just the AI story is real. It's not something that's going to last a quarter. It's not something that's going to last 2 quarters. It's providing return on investments already. We saw kind of Meta talked about it, how their retention rate is higher. More people are staying on the platform longer, how their advertisement business is doing better thanks to some of the AI models and recommendation systems. So, I mean, for Meta, you see AI story is good outside of just your cloud server providers. And from Microsoft, you saw that If you invest crazy amounts in AI infrastructure, you're making money. They have a crazy backlog on cloud. And for that reason, they're going to continue to invest in AI, in the AI story. To me, the craziest thing, this is the craziest thing. I think next year is going to be a year where these big tech companies have capital expenditure of $100 billion each, which is wild. It's wild. I mean, you saw Microsoft said that just this quarter one, they're going to have 30 billion in one quarter. If you times that by 4, it's 120 billion. I don't think every quarter is going to be 30 billion, but I think it is possible for them to have $100 billion in capital expenditure. Meta announced that for fiscal year, they have about, I think it was 80 billion at the, it was about 70 billion at the midpoint of their range. And that's 30 billion from last year. And they mentioned for next year, they expect similar growth. So if they're already at 70 billion, if they add another 30 billion, that's $100 billion in capital expenditure next year. And we see Google did 85 billion. They're saying 85 billion for this calendar year, and they expect growth next year as well. So 3 players, $300 billion in capital expenditure on mainly AI servers. Why wouldn't you be excited about the AI space?
Okay, so I want to talk about cloud because you're seeing right here, Microsoft for the first time actually broke up their Azure revenue and told us exactly how much they make, which is the first time they've done it. And then you got 39% growth, which is just unbelievable. First, I want to tackle it from the semiconductor perspective. In your opinion, based on what Meta and Microsoft said around CapEx and the overall cloud computing sort of like reacceleration of growth we're seeing, is that has to be bullish NVIDIA AMD, right?
Yes. I mean, Microsoft mentioned it really well yesterday that they have this massive RPO. I forget the number. I don't want to say the number. It was definitely in the hundreds of billions. And we have to give our customers this service. And the only way we can do this is by building more AI servers. That's the reason the capital expenditure. So those AI servers are going to be powered by whatever type of AI chip they choose. Obviously, NVIDIA is the market share leader, but we do know that Microsoft and all these other companies have their own AI chips that they're working with, and they also have kind of some of them have a partnership with AMD. So I think for the whole sentiment of the world is they're going to be building more AI servers, and this is just more money that is going to go to the AI chip ecosystem, whether it be your Broadcom, your Marvell, your NVIDIA, your AMD. But the thesis and the story is pretty much there. It's slapping you in the face, and people are still not waking up.
Do you think that's why?
Well, maybe they are.
Do you think that's why NVIDIA is getting kind of the sympathy pump that people are like, all right, I'm not going to buy Microsoft Meta because it's all going back to NVIDIA, so I'm just going to buy more NVIDIA?
I mean, I think obviously all those other businesses are doing well. I think obviously there is some excitement for NVIDIA due to that, but with this AI market, there's a whole different ecosystem that we're seeing. You see kind of your Microsoft and Google with the cloud server providers. That's a strong business within itself. Some people might not want to buy hardware. They might just want to buy kind of cloud computing. You kind of invest in the cloud server providers like that. Then you have your Meta, who doesn't have a cloud server provider, but they do have a form of AI solution with their ad recommendation system. And you might not want the cloud computing, you might not want the actual hardware, but you want an actual product that is benefiting from AI, and you go with Meta. So it's all in the AI ecosystem, but they're all hitting different layers within that ecosystem.
In terms of Meta, so let's talk about super intelligence. Zuck's basically got on the call and said, you guys have no idea what's about to happen. The reason I'm spending so much money is because super intelligence, we have a really good shot, I think was his wording, of like achieving it in the next couple of years. How should investors in the broader AI landscape take that statement? And what does it mean for the semiconductors if Zuck says super intelligence is on the way?
I think that's the wild card just yet. I mean, super intelligence, and especially how Meta is going about it, they're going more about it into some form of consumer product. We don't have, at the moment, we don't have a success story in the consumer space for AI. We have that success story in the data center market. We have that success story in the AI chip play. But we don't have a success story of kind of a consumer goods or a consumer product in the AI market. And that's what Meta is really trying to do. Apple has been failing in that. Google might be doing a little bit with kind of their Gemini on their Pixels and their watches. But I think for Meta, if they do achieve some form of super intelligence, they talked about it, it's really more on the consumer space. And And regardless, wherever it goes, it's still going to need more chips. If they do kind of have these smart glasses, that's great news for a company like Qualcomm, who produces a lot of those chips for the AR glasses, for the VR glasses, for the AI glasses. So within the ecosystem, no matter what direction happens with AI, there's going to be someone in the semiconductor ecosystem that can win. Now we just have to see what layer we're in. I think in the consumer space, we're still maybe a year or so out from there.
So if Zucks is serious that super intelligence is coming, or at least he has a shot to make it happen, even if he doesn't achieve it. OpenAI today, the information reported, does $1 billion of revenue every month, 700 million users. Do you think there's an evolution beyond chatbots?
Oh, for sure. If there's not, then it's game over for AI. It has to be. I mean, there has to be some form of robotics that comes with this. There has to be some amazing news that comes out in the healthcare market. There has to be some revolutionary stuff in the cybersecurity. In every industry, you have to say, wow, I can't believe this happened in such a short amount of time because of AI. So it can't just be chatbots. And I think that's what the real growth story is for NVIDIA. NVIDIA is the leader here, right? It's like, but what's the next AI story? It's not just chatbots. The next AI story is going to need even more and more AI compute. So that's the strength of being the leader in this space. But yeah, Meta and beyond the chatbots, that's what I think Meta is trying to find for the consumer space. Now, I don't know if you saw. I saw you had a prior guest, so maybe you didn't. But OpenAI just announced a new Stargate project in Norway, I believe.
Actually, I did hear about that. And Jensen, we have a take from Jensen on this. Let's listen to that real quick.
Nice.
Stargate Norway marks a new chapter for AI infrastructure in Europe. We're entering a new industrial era. Just as electricity and the internet became foundational to modern life, AI will become essential infrastructure. Every country will build it. Every industry will depend on it. AI is no longer hand-coded. It is trained. It is refined with massive compute. It is deployed into factories, research labs, and digital services. Stargate Norway will be powered by GB300 superchips and connected with NVLink. It is designed to scale to hundreds of thousands of GPUs and support the most advanced models in training, reasoning, and real-time inference. Congratulations to Nscale and to Josh Payne and the teams who helped make this possible.
Okay, how big of a deal is this, Jose?
I mean, 100,000 GPUs, we're seeing those kind of being the new common order. It's definitely a big deal because it shows that Europe is definitely kind of pushing into this new AI era. Europe has been kind of saying that they have a lot of great engineers and stuff like that, but they don't have the compute. They're waking up, and we kind of saw a little bit with recent discussions that Europe wants to invest a lot more in AI investments. And some parts of that might be included in this EU and US trade deal framework or whatever you want to call it. But sovereign AI, something that he just mentioned, the overall nations waking up, building their own AI infrastructure, something he's been talking about for more than 2 years. I mean, quick plug, if you go to my YouTube channel, sovereign AI is something I talked about way before 2024. We're midway in 2025. So Jensen has been telling you what the market is coming, and now we're seeing kind of those opportunities continue to grow.
Yeah, and Jose's YouTube right there. Everyone, please make sure to check it out and subscribe. Also, newsletter, What the Chip Happened. I'm putting that in the chat. It kind of got to be subscribed given what's going on with all this news. Like
that one. Yeah, I mean, with all this earnings, so today we're going to definitely have something on Meta, Microsoft, and a few semiconductors reported yesterday. So I'm doing some research on those. We had Lam Research, we had Qualcomm, a lot of information, and just trying to get the best information out there as quickly as possible.
Yeah, so please make sure to subscribe to that. Google, why is the market giving a middle finger to Google after Meta and Microsoft?
I don't know. This one's a weird one. I mean, they did great earnings. We did the earnings last week. They showed cloud growth. They showed advertisement growth. They showed the search was still doing amazing for their part. I guess that was just nice for 1 week, and a week later, the market is back to that bearish thesis that AI is going to eat up. I wonder if there might be some. I know they have a lot of kind of like legal issues happening with things like monopolies. I don't know if there's something happening there, but Long-term story, Google is right now one of my favorite Mag 7s. This is one that I'm continuously adding on, even at this 191. I bought some at the 150s, added more in the 160s. This is one that I use Gemini almost on a daily basis now. It is become my one of the go-to AI solutions. Open, and Grok is actually killing it too, but all these AI models are getting pretty good right now.
Okay, so then the last question, Jose, actually real quick before I ask about Amazon, ARM, any idea why they're tanking this bad?
I mean, not much growth. I think you posted on X earlier today. I'm pretty sure it was you. It's super expensive. The company is not growing at rapid levels. Or you were just talking about it. I think you were just talking about it.
Yeah.
I was listening then.
It's expensive, and SoftBank still owns 90% of the float.
Yeah, so you're at their mercy whenever they want to sell off to build more AI infrastructure or to do whatever they're doing with these Stargate projects. I think there's more risk to reward here for ARM. But I can see I guess I can see the growth opportunity. I mean, royalties, licensing deals is always a great margin business. A lot of the NVIDIA's CPUs that are going into all these super chips are ARM based, so they get the money out of there. So if NVIDIA is growing, typically you should believe that ARM is going to grow, but just not one for my portfolio.
I know your newsletter will cover Lam Research, but any quick thoughts on that one?
I like it a lot. They mentioned that they were growing their market share for this fiscal year. They're also increasing the market for this year, and they believe they're going to continue to grow their market share. So beating the competition in the upcoming years. I think one of the, from what this is one I'm still reading, so just giving top level of what I've looked at so far. One of the biggest red flags seems to be still the Chinese market. It still was about 34% of total revenue. Lam Research, ASML took a dip after earnings. Lam Research took a dip after earnings. I'm looking at Lam Research right now. I think this is one I wouldn't mind adding on for that long-term equipment exposure.
Right. Final question, Jose. Amazon and Apple after the bell. Just quick thoughts on both of them. Obviously, Amazon, the burden is high for AWS, and then for Apple, what do you think about what they're going to do with AI?
Yeah. So with Apple, I mean, I feel like they don't really say much during these earnings calls in terms of innovation. I mean, I know Meta has been poaching some of their AI engineers. I wonder if they're going to discuss something like that. Do they still have an AI engineering team, or did they all move out? I'm not too concerned with Apple right now. I think Apple is now, it used to move the market. I might still, but I think the market right now is really looking at the AI story. So I'm looking for Amazon. We saw cloud growth in Google Cloud. We saw cloud growth in Microsoft. The market was giving a nice pump on Amazon earlier today. I don't know if it's still there. Amazon needs to show that it's not losing the market share, that all this is growth to the overall market. So that's going to be the first thing. If it's not losing market share, it needs to show that it's seeing that growth. The second thing I would see is Meta reported some strong numbers on their advertisement business.
Yeah.
Is Amazon seeing that ad business as well? Or is Meta, with its better AI recommendation system, taking wallet share in the ad space? So that's what sucks about kind of being last. You have to showcase that you're with the trend and you're not the one losing against the trend. So if Amazon shows that it is with the trend, I think that could be bullish. If it's showing that it is losing the market, then that would be the bearish sentiment. As an AI, NVIDIA semiconductor investor, obviously looking for that capital expenditure. Are they increasing? Everybody else has. I don't see why they wouldn't.
Got it. Love it. Thank you, Jose. We appreciate some coverage on a day like this. Jose's Twitter and YouTube right there in the chat. Please make sure to check them out. You've got a busy rest of the week headed for you. And then in about a month, we got NVIDIA.
Definitely. I mean, and like the previous guest mentioned, when you love what you do, it's fun, right? It's definitely fun, even if it's super, super busy. But reading all these transcripts, looking at all these calls is what I enjoy doing. So thanks for having me, and thanks for the community. Hopefully they said nice things about me.
Oh, dude, you're the I don't think anyone has ever said a negative thing. They can't, like, first of all, you made Hood go up. You like, I mean, just now the last guest, they didn't say negative things, but the amount of ways they can come up with ideas on how to.
I was laughing in the chat. I was reading. Yeah, it was ridiculous.
I mean, the things I'm reading, I think it's a talent to keep a straight face, to just see someone like, it's just, but no, they love you. So thank you, Jose. We will talk to you later.
Take care.
All right. I don't know why the market's tanking, but again, I got to stop using the word tanking because like that's a bit too aggressive. But we are going a bit red. Trump extended the tariff deadline with Mr. Mexico. And that is why, I mean, that's not a reason to tank, in my opinion. I think that's actually a good thing. But 90 days. So let me read exactly what he said. He said, I have just concluded a telephone conversation with Mexico president, which was very successful. The complexities of a deal with Mexico are somewhat different than other nations because of the problems that we have in the border. We have agreed to extend a 90-day period, the exact same deal as we had last time. Mexico will continue to pay a 25% fentanyl tariff, 25% tariff on cars, 50% on steel, aluminum, and copper. Additionally, Mexico has agreed to immediately terminate its non-tariff trade barriers, of which there were many. We will be talking to Mexico over the next 90 days with the goal of signing a trade deal. So that is what you got in Mexico. Now, look, I think that is good, but also, again, that J Powell, I've not had a lot of time to dissect what J Powell really said, but top level, he was hawkish. And Trump doing a taco on a hawkish J Powell, I think the market's like, wait a second, if inflation really is sticky and J Powell's not going to cut, and these trade deals, there might be more ramifications of the tariffs on inflation, and we don't really have any clarity on them. Yeah, Meta and Microsoft crushed, and you can't ignore them, which is why Meta's still up 11%. But it's also like, are we really going to give a higher premium to the S&P with all these surrounding factors? Or it could just be it's August, and it's time to take a little bit of a break going into August. So it could be a variety of things that are happening right now. But that is some of the pain that we may be seeing based on Trump. And then obviously algos have just been crazy today. I hope for everyone who has never experienced an algorithmic sort of driven day in the markets, at least algorithmic driven morning, this was your first time experiencing it. I think last time we really felt it was about 2 months ago after the tariffs. It was not on April Liberation Day. It was a couple of days after that. But today was a classic example of dump, bottom, move up, high of day, dump again, but not dump to the bottoms, which means at the bottom at, 10 a.m., that's when the market decided, all right, this is it. The algos are done doing what they're doing. And then you move forward. And it was just one of those days after Microsoft Meta in terms of how we got this type of a move. All right, folks, let's bring him onto the show. This is someone a lot of you guys have been asking for the past week. He has had a busy week trying to analyze what has gone on with some of the stocks that he has been covering. But let's get his perspectives on the broader macro and what is going on with one of the big names that a lot of you guys care about as well, which is UNH. Ladies and gentlemen, Mr. Christopher Patel.
What's up, man? How's it going?
Dude, before we get into it, just raw reaction, Microsoft Meta. How have you been thinking about that over the past 24 hours?
It's pretty insane, man. The amount of CapEx these guys are willing to spend is really, really high. But that also means that they probably see a lot of forward demand. You know, I mean, these guys are not going to just spend money because they want to spend it. You know, they see the oncoming demand and, you know, they're willing to do it. And it's the same thing with Google as well. Like Google turned up their CapEx to $85 billion a year, you know, so that means that none of them want to get into a position where they're going to, you know, take a back foot on the AI race, with the exception of Apple, which I wonder if they're going to actually speak about what they're going to do about it. But like a lot of the companies that I've been covering, even though they don't have direct exposure to AI, they actually do mention AI in their earnings calls,
right?
About how there are things around AI that they're going to be able to utilize to improve their businesses. And I think that's something to just keep in mind. So, you know, I think at first the conversation was, hey, is AI only going to be chatbots? But you're kind of starting to see that there's real world applications that are starting to kind of come up. The one thing I will say is AI still hasn't figured out Hispanic names yet, though, because one of the reasons why I've been literally like a lot more MIA the last couple of days is I'm working on a project at work where we have like thousands of orphaned studies in our old archiving system for radiology, and so the challenge is the name that Hispanic people have. It's like Jose Morales Jr. And then it's like literally like 4 things. And so what happens is in Epic, the EMR, they have a name. And if it's even slightly different or off, then it'll create like a mismatch thing, and it'll kind of just put a lot of things on hold. So we're taking all these orphan studies and helping migrate everything, and it's just, man, it's been a pain in the butt because I have to do everything manually. I wish I could just hand this to an AI agent and let them do it. It's like,
Yeah.
but the thing is, AI can't tell the difference between like a Jose Ramos and this Jose Ramos, and
Right.
it's disjointed, and it pisses me off because I feels like I'm doing a lot of like busy work, but sometimes you have to do busy work. That's just how it is.
And I think that's Zuck's promise that superintelligence is going to commoditize a lot of that stuff. We'll talk more later about Microsoft and the study they put out about some of the jobs that will be replaced, but there is a lot of stuff going on in that AI ecosystem. Okay, so you know a lot about UNH. You can probably talk for the next 4 hours about UNH. You and I have personally been on the phone, and you can talk for a long time about UNH. So I don't want to get super nitty gritty because people are just not going to understand it because the thesis is so deep. On a macro, if you had to describe what happened at the earnings, why the stock is acting the way it is, and where you see the opportunity over the next couple of years, how are you thinking of United Healthcare right now?
So the first thing about United Healthcare was they've had almost 20 years of a bull run where things have just basically gone up and to the right. So whenever you have businesses that have that huge upward move, what tends to happen is your expectations become kind of built in. And the thing is, it's really hard to live up to those expectations and constantly keep feeding on them. So if you look at things and you just broaden out your horizon, you can see that, United Health has been like a staple of most like blue chip portfolios. So number one, this is where you're coming from. Now, once you figure that out, you have to figure out, okay, why did they go down? Like, what's the reasoning behind it? And a lot of it has to do with just because of those elevated expectations, the company took on a lot more risk than it should have. And one of the ways that they did that is basically by last year, when you do insurance, you have to, from an actuarial standpoint, try to figure out what the expenses are going to be like a year ahead of time, right? So, when you tell someone, hey, here's a quote for insurance, there's a built-in margin that you're going to account for, but then you have to give them a price quote for it. And the thing is, everyone is competing. So there's other insurance companies that are also in the market that are providing their own bids out there. A few of the insurers like Humana, CVS, they kind of pulled back a little bit. And United Health, because they were in like growth mode, because they've been growing for so long and doing things, they actually bid a very low amount. And this year, the cost of healthcare has gone up dramatically. Some of it is due to just different billing changes and what is that thing called? Some of the legislation that was in the IRA. So a lot of those impacts weren't taken into consideration. So what they did essentially was they have been one of the most profitable healthcare insurance companies because they've always been able to kind of like dodge these pitfalls, because in insurance, that's what you deal with. You always have these pitfalls that come your way. But this time around, they didn't. And so because of that, they ended up taking huge hits in their profitability. So in the past, they would do 8% in operating income and about 5% in net income as their amount. And at the same time, their growth was up and to the right. Last year, they issued, a bid that only had a 5% increase in premiums, but the cost went up by 7.5%. So now your 5% margin that you had before net just got just got cut in half. Right. So that's why their earnings look absolutely terrible.
And the guidance, I imagine, is also what people are pissed off about, the EPS.
Right. So, you've got a new CEO. He's technically the old CEO who was there before the new CEO started in 2017. And, they acknowledged a lot of the mistakes that they made. A lot of it was due to pricing. They said, look, we made some mistakes on pricing that we're going to correct. If that means that we're going to slow down on growth, we're going to slow down on growth. So this year, if you look at their top line, they're still growing at around 11-12%. But if you look at the bottom line's actually compressed significantly.
Why was that EPS? Are they sandbagging, or why is this EPS as bad as it was?
So, in my opinion, they are sandbagging their numbers a little bit. They took some write downs that they didn't necessarily have to take down right away. So, a lot of their EPS targets that they have are very conservative because the thing is, like when you're a new CEO, the first thing you want to do is basically give yourself a nice cushion so that you have enough time to basically change the business around. Whenever you're in flux in a business, you want to give yourself a lot of breathing room. And so when the new CEO came in, he gave himself a lot of breathing room. They recognized a lot of things early, some of the losses, because when you work in insurance, you're definitely going to develop losses here and there. Now, a lot of times those losses, you're going to recognize them over, a few periods before you're actually going to put them on the books. He accelerated that. And so they accelerated 1.6 billion of losses to this year. So now your EPS numbers look bad. And on top of it, your margins compression was already there. So you're taking a dual hit. And then on top of it, you're guiding for good growth next year, but you're cautioning everyone, saying, look, we're going to be a lot more reasonable with our expectations going forward. We're not going to be like, we're going to grow consistently X amount percent no matter what, And
So
I think that's one of the
do
biggest
you-
differences.
So I think that makes a lot of sense. And I think a lot of people have been covering it really well. So, and that's a good top line overview, which is this like margin compression, guidance reduced, and that's why the street is punishing it. I guess the big question for everyone and the main thing about UNH is, do you still think it's an asymmetric opportunity at 250?
I'm not going to say it's 100% asymmetric. Like you're going to double your money in like the next 6 months, because a business of this size, you can't turn things around on a dime. It's like a battleship. Small, nimble boats you can turn around very quickly. Big, huge ships, it's going to take some time to turn around. So they're in the process of making the turnaround. But it's not going to be something that happens overnight. The management team that they have is actually really good. They have a proven track record. So that gives me a little bit of confidence. I think the market may be a little overreacting a little bit to the current guidance. And that's why we're seeing this drawdown, but I don't mind it. The thesis is intact. I've seen.
Are you buying this dip, or is your position big enough for?
I think my position is big enough for now, but I may end up unloading some of my other option strategies that are getting closer to expiration, and then deploying that capital. Not really. The cruise lines I have until 2026, so that those are way out there. It's more I have like Amazon spreads that I bought during the lows that basically are fully mature now, and they've gone past my short leg, and they're expiring in December. So same thing with TFC. I had spreads on those that did well. And that's the thing, right? My investing style isn't, hey, I'm going to find the momentum play. I pretty much like your analyst who came on earlier and said, look, I have a thesis. It's 3 years out. I'm going to basically make those investments right now where the market is not giving the company its proper valuation, and, and lean into it. And sometimes you're a little early. And I think with United, I think I've been a little early, guaranteed I've been a little early.
It's fair. It is fair. It happens. And, with some of these plays, ultimately, it's a question of how they can turn things around. I do agree with you. I think they are sandbagging it a bit to give themselves an easier way to outperform. Yeah. But, I mean, to your credit, you've been saying United is a multi-year play. It's not an overnight thing. So for those that got into it, it is a bit safer than paying some of these multiples. It's not going to grow at some of those stocks that are getting those multiples, but that also means that you have more time to just let it marinate and then eventually see the thesis play out.
There's also another thing too, like you're going to see multiple compression when it comes to businesses like this. Like when you have a business that's been outperforming and shining the market for a long period of time, the market tends to give you a very favorable multiple compared to your peers. So if you look at like the other companies in the sector, they got like between 10 and 15 PE multiples. United constantly got like a 20 PE multiple.
Yep.
Right. So now all of a sudden, everyone's like, wait a second, this is just an insurance company again. And they're looking at this and saying, well, maybe I'm not going to give this a 20 multiple anymore. Maybe I'm going to give it a 15 multiple or even a 12 multiple. And if they're guiding for what they're guiding and and you use that to a 12 multiple, UNH is not cheap, but it all depends on, hey, can they turn it around and can they get their EPS back to where it was before some of these pricing mistakes that they made last year. And I think the strategy that they've come that they're talking about is there. The other thing with United is that, a lot of people, when they look at United, they just think of it as just like one company, but technically it's two companies. It's United Healthcare, which is the insurance arm, and then the other one is Optum, which is the healthcare delivery arm. And the thing is, people really are not accounting for how big of a driver of business is for them when it comes to their Optum arm. So their Optum arm even has like 3 different businesses under that one. One is their PBM, which is Optum RX. That one might be a little bit challenged going forward because the Trump administration's, a little bit more on the heavy side when it comes to regulating some of the PBM stuff, but they have decent margins over there. Their Insights business, which is their software business, has a 20% margin. So that's really good. And that one is actually something that the CEO mentioned could be a growth driver for them going forward, because AI is there. And, whenever you have technology companies sitting under, in one of your core businesses, you can actually juice that one up to kind of help raise the rest of the margin in the business. And then the other one is their healthcare delivery, which is like they own a bunch of clinics, they own a bunch of what are they called, like home health services. So there's margins in that one too that are actually in excess of your traditional insurance company. Insurance companies, they tend to have like 3 to maybe 7% margins, depending on what part of like the which part of the insurance segment that they cover. So
yeah, but you're basically saying there's certain segments that can create more SaaS-like margins, and that can increase the overall margins for the business. Guys, Figma's not live yet. I got 1 share of allocation. I don't know when it's going to go public. Probably in the next, I would say, 20 to 30 minutes, by 12 p.m. for sure. So I think in the next 5 to 10 minutes, it could go public. Real quick, Noto, pretty excited. He said, hey, now that the deal is closed, we can answer your questions. SoFi Investor Relations put out a big post talking about why they did the capital raise. You can read through that. But Noto seems to be pretty excited. He probably had a quiet period where he couldn't talk about it. And markets rewarding SoFi today up about 5%, kind of forgetting, or at least not caring about the dilution. All right, Kris, last question for you. J Powell and the Fed. I think he was pretty hawkish. I don't know what your take is, but what do you think August is going to have in store for us in terms of either seasonal weakness and if we're getting this damn rate cut?
I don't think we're getting a rate cut. I mean, the economy is doing fine. Inflation's like not bad, but it's not good either. It's not under their target. So J Powell's like steady on. Like he's, they asked him a while ago who your favorite chair was to Jerome Powell, and he said Paul Volcker. And Paul Volcker had to deal with a lot of the similar things that Trump has to do. That Powell has to deal with, which is an administration that wants him to cut. And he's just like, no, if I'm going to be remembered as someone, I'd rather be remembered as Paul Volcker rather than Arthur Burns, So I think this is a lot more. I think people are saying that this is like politically driven and it's politically charged, that Powell hates Trump. And I don't think that's the case. Powell was nominated by Trump, right? But the one thing about Powell is that he is definitely going to lean into his own his core beliefs, and he's not the type of guy that's going to be basically railroaded over. And I think the administration right now with Pulte and Trump, they're really hammering him hard, like social media, saying that they're going to investigate like the Fed building thing. It's just it's undue pressure that's not necessary.
Okay, so if we don't get the cut, you think August we get a pretty 5% dip or do you think Meta and Microsoft is so good that any dip is going to get bought in this market?
I mean, there's definitely froth that's all over the place, but there usually, when it comes to these drawdowns, there's usually some kind of catalyst that pulls everyone down, right? Yeah. So if you remember April, it was Liberation Day. And then remember last year around August, it was the Japanese yen carry trade blowing up.
Yep.
Right. So we need a catalyst for the market to crash. And as far as I can see, I don't really see too many catalysts out there that are, broad market based. I mean, there are some, negative things that are happening individually to like 1 or 2 sectors. And that's why you're seeing some sectors correct. in particular healthcare, because right now you're dealing with a lot of regulatory changes after the big beautiful bill where some of the subsidies around the ACA are going to expire, right?
By
So
the
a
way,
lot of
real quick before we continue, Figma is now expected to open at $70, folks. That's the
There it is.
initiation from Bloomberg, not 33. So for those that got one share, you can make a quick $30 if you want to sell. But
yeah, that's insane to see that. It's look, anyone who got an allocation, congratulations. I put in for an allocation. I think I might have gotten 1 or 2 shares from Fidelity. You know.
do you
So.
think Figma is a function of frothiness, or how are you interpreting that?
I mean, I've spoken to a few people who love the product. They see it and they love it, you know, and they work in the industry. So, I mean, when it comes down to it, there are some companies and some businesses where you kind of have to just ignore the fundamentals, you know, not look at the numbers, not look at the net ARs, and just go with, hey, I just see everyone using this thing, you know, and just invest in it and go from there. I wouldn't put a lot of money in it personally. I wouldn't go into it. Like for me, most of my heavy conviction plays tend to be, you know, put in place with me having a good baseline understanding of where the business is right now and where it could be in the future. And sometimes I get things wrong, you know, but if you look at my track record, I've gotten more things right than wrong. So whatever methodology I'm using is working. The one thing I need to get my freaking maroon hat back. Ever since I haven't been wearing my hat, United has been going down. I went to dinner with the wife last week and I left the hat in the car and I've just been too lazy to go get it. I'm gonna go get that damn hat back, man. This is my lucky hat. So, you know, I'm superstitious a little bit when it comes to the market, you know.
Well, this is what the market will do to you. The market will make you feel like these it's emotional, bro. The first 30 minutes of the day, I don't know if you were in the chat. I mean, it was just people were losing their minds, and for good reason, because it's like these are amazing earnings. Why is the market done? But it's not in our control. Sometimes it's just it is what it is, right?
The market's got a mind of its own. I mean, you know, some companies are getting 700% PEs, while other companies are generating billions of dollars in profits, and they're like, yeah, I'm not buying that. Screw that bullshit. You know, so it all kind of just depends on how people interpret a business. And sometimes, you know, you're focused on value and sometimes you're focused on growth. And then there's other times where you're focused on momentum, you know, and the momentum I think right now the market is being driven by a lot of momentum rather than fundamentals. So, you know, if you're a momentum person, you're loving this market. Eventually,
I agree. But then you see Microsoft and Meta, and that's more fundamental, right? Than momentum.
Well, that's true too. Yeah, no. There's some companies that are going to be riding momentum and fundamentals.
Yeah.
You know, so it's almost like a dual catalyst for them. It's like a double whammy. So it's like same thing with NVIDIA. You're seeing the fundamentals of NVIDIA. I mean, they're not growing, they're not slowing down. So they're growing. And then at the same time, the stock is going higher, right? And then there's people looking at the numbers and saying, wait a second, I'm under invested in it. I'm going to keep going higher. So,
right.
You know, so yeah.
All right.
I look, the one thing I am going to take a little bit of credit is the cruise lines. You know why? I got shit on for the cruise lines so hard for a good solid year, man. And all of them have done extremely well. And I'm glad Norwegian today is starting to kind of get back to its normal level again. And I think the cruise lines, especially Norwegian and Carnival, still have a little bit more to go before it really gets to the point where you're seeing like kind of topped out appreciation, and you're going to see more like modest growth going forward. But let me tell you, when this thing was like $6, no one wanted to buy it. No one wanted to buy it. Same thing with Carnival. No one wanted to buy this thing.
And all of them are having record quarters. And it's great for the consumer in terms of travel demand. And the company and Carnival had a record profit. So the cruise lines really were, you have to look in the market to find them. And they have played out pretty well.
Yeah. I mean, you really have to you have to dig down into the numbers. You have to understand the core business. And a lot of times when investors, they sell these things off, they sell them off because they see the short-term problems. And if the company is able to fix those short-term problems, the market rewards people for holding through and just, you know, living. I mean, remember what happened in 2022 to most of the Mag 7, and then especially Meta.
Yeah.
Meta went down 70%. which was insane if you think about like
Literally a
the
10x.
amount of value. Yeah. You know, so, and that's the thing. So businesses sometimes they overcommit to certain things. And when the businesses realize that they've made a mistake, the question is, are they going to double down on their mistake, or are they going to start making the changes necessary in order to get back to what their true potential is going to be in the future? And Meta realized that they overhired people. They invested a little bit too much into the metaverse, and they weren't seeing any tangible returns from that. And so Zuckerberg made some hard decisions. I think at one point he cut almost like 30,000 employees in like a few short months. But by doing that, he was able to get operating cash flow back, and then utilizing that cash flow to then buy back shares like at an expeditious pace. And now you're seeing the benefits of that in the future. And so I see similar things happening with some of the other companies I'm looking at. Like I said, for me, United is a great turnaround play, but it's definitely not going to be like overnight. It's going to take some time. And I think we can revisit this probably 2.5, 3 years from now. And, you know, and then we could talk about how, like, what are all these things that they did to get back to where they needed to go.
Right.
So.
All right. That's Kris Patel. Kris, I'm putting your Twitter in the chat. I'm sure we will talk later this week as well. We'll have Steve on, guys, on the market close. And
later.
We'll keep going from there. Later. Thank you, Kris.
Bye.
All right, folks. Figma pretty soon. Let's get an update on Mexico and Trump. And then I think we'll have Figma realistically in the next 20 minutes max. We should be seeing Figma going public.
There was a phone call, Sarah, President Trump posting on social media saying he just spoke with Mexican President Claudia Sheinbaum, and the two leaders agreed that for the next 90 days, they are keeping trade at a status quo between the U.S. and Mexico. They're keeping the exact same deal. So that means Mexico will continue to pay a 25% tariff on its exports to the U.S. due to fentanyl, although a White House official did confirm to me that that tariff will continue to hold exemptions for USMCA compliant goods. There's also those sectoral tariffs that remain, 25% on cars, 50% on metals, including steel, aluminum, and copper. So everything holds firm while these two sides continue to negotiate for the next 90 days. And Sarah, this is a real good sign for stability in the markets and for businesses, as Mexico, of course, is the U.S.'s largest trading partner. They had been threatening, the president had been threatening to raise that 25% tariff to 30%. Now we know it will hold at 25% and the exemptions will remain at least for the next 90 days. On social media, Mexico's President Sheinbaum also saying, describing this as keeping things steady and giving them 90 days to achieve a longer-term agreement. So they're trying to work on issues around the border, around fentanyl, and could get something longer-term from there. So guys, as we do await this midnight deadline, we do expect we could get more news like this with other trading partners. Canada is now the biggest U.S. trading partner out there without some sort of a framework deal to announce. So we could get news on Canada today. White House officials tell me something on Thailand and Cambodia is still possible as well before tariffs are set to ratchet up for something like 50 or 60 countries at midnight tonight. Guys.
Yeah, midnight tonight, folks, is when the tariffs go live. So I wouldn't be surprised if we get some more new deals today. I think we had Basent on this morning, so we'll watch a clip of that. But I'm happy they got South Korea and Mexico. Well, Mexico delayed, and South Korea, I guess they got something kind of done so far. We need to see a lot more of them by tonight. And if not, then yeah, the market's going to factor in a lot more tariffs. So we got to see how this plays out. Robinhood right here trying to get back to 107. BBAI is up 2%. SoundHound is up 3%. QBTS, D-Wave, that is up 6% today. I mean, some of these names are doing okay in the midst of the volatility. AppLovin, I still don't know why that's up. Does anyone know why that's up? I feel like that's a reaction to Meta earnings. They did not have earnings last night, AppLovin. I think the market just thinks advertising tech is doing very well, and so that could be the reason. But that one, big move today as well. Duolingo's up today. Nebius is up today. You're seeing some of these stocks that got dumped in the morning or that have been dumping for the past couple of days. Duolingo right here up 3%, and then Nebius up, 10%? 9.4%. All of that's based on what Meta, Microsoft said today about data centers. CoreWeave right here up 13% as well. Figma should be soon. Figma should be soon. I mean, I have one share, so if it pumps, I kind of don't even know if it's worth selling it, bro. Like if it opens at 70, okay, I'll make $40. But like, what if they just take it even further up? So I don't know. I think I'll just leave my one share at this point. but we're going to be seeing that soon. We're going to be seeing that soon. Snapchat buyer, $10 call, 326, 1.2 million. Snap has been getting a little bit of a bid over the past couple of days. 964, that's up 3.38% as well. Hims was at 70. Grab is back at 504. Hims 69.40. And then Palantir just below 160. So there you go. Yeah, some people are saying 75.80 Figma open. I mean, I think it should be happening literally in minutes. And we're going to see this one go public, and it'll be a big deal. I'll try to get the live stream of it going public. Here's Vlad on Bloomberg, by the way. And then we'll see what happens with Figma.
Challenging ourselves to serve our customers better and consequently grow the business. But if you're asking if I'm like looking at the stock and trying to drive that directly, no. I mean, we're looking at the inputs to our business. And right now what we're seeing is our customers are happy. Net promoter scores are at a 4-year high. It's leading to net deposits, which have been very strong through July. And that's leading to gains in market share across all of the assets. And you're seeing that in revenue and EPS, which have been very, very strong as well. And, we're having these product events where we're announcing products that are, I think, far ahead of where the rest of the industry is. So I don't think it's slowing down. We're, if anything, accelerating further.
By the way, more than 420% over the past 12 months. You're worth almost $100 billion. You're now worth a lot more than Intel, which for an old guy like me, that's a real milestone. Where do you see the biggest growth? I know you're expanding overseas. We talked with you last time about tokenization. What's the biggest shooting star at Robinhood?
I think if you look long term, the big potential that I see for Robinhood is how can we expand across two different axes. One is from being US only or US primary to being fully global, available to billions of people around the world. And the other is, can we go from being retail only and serving the full wallet of a retail customer and being this sort of like financial super app to a full platform that serves not just retail, but businesses and institutions. And we're getting into that through some of the acquisitions that we're making and through organic platform expansion.
By the way, could I live on Robinhood now? I mean, could I have Bloomberg deposit my paycheck with you and pay all my bills with you and, get a loan from you and do my trading with you? Are you looking at that full suite?
And how fast can you get there?
You can do the lion's share of that. Robinhood Banking is actually rolling out later this quarter. We're still on track for that.
Dude, that's another reason why I feel like the end of the year is going to be really good for Robinhood. As long as the macro sustains itself, banking is a massive tailwind for the amount of money that's going to come to the platform, for a stickier relationship, and for all the things they can do with mortgages and lending and all this stuff. And so, I mean, they could create a lending platform, right, where they don't take any risk of the loan, but they just do the referrals. There's a lot of things with banking, and that's just another vector of growth going into the end of the year.
It's now rolled out internally to our thousands of employees, and it's looking really good. So that'll allow you to put in your paycheck, get checking and savings accounts. You don't have to go to the ATM. We figured out how to get cash to you, to where you are. For those of us that still use cash, you can do your estate planning. We have a home loans partnership with Sage that lets you have a mortgage at an industry-leading rate. And of course, your trading, your investing, your advisory. So we can help you with the lion's share of that. I didn't even mention the credit card, but you saw my credit card last time. I think it's the best credit card on the market.
So you were talking about Robinhood Banking launching to a broader audience soon, but what does that put you in terms of your relationship to the broader banking industry? You just saw about a day ago, JP Morgan and Coinbase inking a deal to allow wallets to be more linked to bank accounts. Are you going to be partnering with banks, or are you running in direct competition to them?
I think that as our companies become bigger and bigger and just diversify into more segments, the relationship with counterparties will be collaborative and will partner in some ways. And of course, in the broad sense, every financial company competes with every other one if your goal is to get customer assets and greater wallet share. But I think it's nothing in the financial services industry. The large companies have always like collaborated and competed across different axes.
So to Matt's point a little earlier, one, you're growing tremendously. You have stock as currency to do so. You became worth more than Intel. How much firepower does that give you for a transformative acquisition? Could you do something much bigger? And what are the types of places you would look?
Yeah, interesting. I've never had Intel brought up as a comp. But I see what you mean about that being historically, these companies that you think of as very infrastructural.
It's iconic. It's an iconic company if you grew up with it like me, and then you've eclipsed it.
Even being in the same conversation as those brands is humbling. I think we've always been very deliberate with acquisitions. So we want to make sure it pencils and it makes sense for the company. It gives us 18-month acceleration to the product roadmap. We get a team that's like DNA culture aligned with us because we like to move fast and we have very, very high bar for talent. And if all those are met, we've been pretty active, as I'm sure you're aware, in the acquisition market. So I wouldn't say I have a particular itch, but we've got a great corp dev team and we tend to look at every opportunity that comes up.
All right, there you go. Not a bad interview at all by Vlad. Again, the stock, this thing should be up a lot higher. It's market today, it's algos today, it's a lot of stuff today. But this is becoming one of the most obvious stories in the market, dude. It's a question of, do you trust them to continue to execute? And they just haven't given a reason not to. So I think this one will be very exciting. Now, Figma, Evan said Figma's not going to go public until 1 o'clock. Which is not good because I definitely need to leave in like the next 10, 15 minutes. So maybe we don't see Figma go public. I'm going to give it to like 12:05. If it doesn't go public, it is what it is. We'll talk about it in the market close. By the way, the market close is going to be madness. We've got Amazon. We've got Apple. Oh, hold on. Okay, I'm going to ask you guys up right now. And I think I already know your guys' answer. But would you rather listen to Amazon or Apple's call or have Steve on after we get all the results? Amazon and Apple, I'm not going to lie, have the most boring call. Like when I mean boring, bro, I mean boring. Like I feel like it would be a little bit more fun to talk about earnings. If you really want to go watch it, you can just go listen to someone else streaming it because there's tons of like audio streams of it. But I've done it at least 5 times now. I'm telling you, we did Apple once. I legit almost fell asleep. And then Amazon last time. Andy Jassy, I love him, but it's boring, bro. It's like there's like, it's just not that exciting. Yeah, I think Steve, right? I think Steve. Sailor's call is also pretty boring. We listened to Sailor's. They were selling merch at the beginning of the call for like 30 minutes on the MicroStrategy merch store. It was kind of boring. However, he did say just now, this will be the most important event in history. If you are interested in Bitcoin and MicroStrategy, you should join. They're not going to announce anything crazy. They're just going to show a massive EPS growth because of FABZ accounting. So it's not like when he says most important event in history. I mean, maybe there is some massive announcement I don't know about. And we'll cover it live if it happens. But a lot of these earnings calls are not that exciting for these big companies. Yeah, I think Steve. Grab's call already happened. I listened to the call last night. You can download the Quarter app if you want to listen to it. It's a really good app. It's a free app, and it has transcripts, all that stuff. I think it's QUATR. And so I listened to it last night. I'm probably going to listen to it again. But there's some gems in that call. I'm going to make a very long video, probably over the weekend, detailing all my thoughts on Grab Mart, Grab Ads, the financial services business, top line revenue growth, EPS, adjusted EBITDA, the network effects. There's just a lot of their autonomy push. There's a good amount of stuff to cover. So I'll try to get that out over the weekend. Yeah, and if you type it in on YouTube, you can find it on YouTube, the Grab call as well. Figma's opening in 3 minutes. Okay, I hope you're right. I hope you're right about that. I got the stream up live. If it is open, it'd be very fun to see. While we're waiting for that, dude, look at this. Look at this, bro. We had so much stuff yesterday, we didn't get to show it. Figure CEO Brett Adcock, he's one of the big humanoid robot companies. Look at what he posted. Here's a figure in my home doing laundry.
All right. Figure 2 humanoid robot doing laundry in Adcock house. What do you guys think? Honey, you want to throw that in there? Yeah. Throw it in. Good job. Hopefully we never have to do laundry ever again. What do you guys think? Wow. Wow.
That's kind of crazy, bro. That's crazy. And then this is the second video he posted about the robot inside of the factory that's been doing this exact same task. That's how you train these robots. You get them to do repetitive stuff. It's pretty wild, dude. It is pretty wild. Yeah, 100% agree with Woody. Anyone critiquing this is not getting the point. We are not going to get supersonic robots that are a human identical beings tomorrow. It is going to take time. But the fact that we're alive to see this happen, imagine in 10 years, Zuck's just said, we have no idea what's coming. Imagine in 10 years what's going to happen. Like the point is not about how good or bad is it. The point is that it's happening. And, you know, for Tesla, this is going to be a massive opportunity as well. Because I mean, Elon's been saying this is one of their largest bull cases in terms of verticals. And then for Figure, hopefully it's a big opportunity. Figure has a lot more risk because they're not as big as Apple, not as big, but not as big as Tesla. But the point is it's happening. It is happening. 71% of you say dump on Apple. Let's do the Amazon poll. Amazon pump or dump. What do we think? I think it's an easy pump if AWS does what Azure did. I think it's an easy dump if AWS misses. So I think it's like that's the black or white for Amazon. All right, Figma, if it is going public in a couple minutes, we will have it loaded up. If not, we'll talk about it on the close. But it looks like it's going to go public at a very strong level. When would you sell, Grad? Dude, like, honestly, my price target is $10 by 2027. And if it gets to 10, I'm probably not going to be selling at 10 because if they found a way to double in the next year and a half, they're probably going to keep going higher. If it gets to like 7 or 8 and I want to downsize my position a little bit and trim, then sure, right? Maybe just because I want to raise a little bit of cash. But I have a lot of shares. And so even downsizing, and I have a lot of options. So that's just risk management. In terms of actually selling and like moving on, I'm not convinced based on those earnings that that's the right thing to do, whether or not the stock is going up. So again, I've been through this twice with Hood and Palantir. You have great earnings, great results, qualitative, quantitatively. The stocks don't move. And so eventually you have to ask yourself, do you believe in it or are you just looking at a stock price? And if you're purely obsessed with the stock price, then it's going to be hard to invest in anything. You know, one of the things that the altimeter investor was telling me last night is, again, she pitched Hood to Brad Gerstner, who is the one who ended up making the official investment. And then Hood tanked after they bought it in November because of the April tariff stuff. And then she called up Brad and she was like, Brad, we got to buy more. And he was like, are you sure? It's a brokerage, cyclical, this, that. Like, you don't know about the tariffs. Maybe that hurts them. And she was like, no, like, don't worry about the price. Like this is we've done DD on the company, not the price. The price is just giving us a great opportunity. And they bought a lot more. And she's one of 25 employees at Altimeter. She's responsible. I mean, she works with a team, but like to be one of 25 people at the company, they do VC, hedge fund, and private equity, and then obviously public market stuff. For her to be one of the main people that convinced Brad, because ultimately it's Brad's decision. He makes the final yes or no on, especially when they only quote unquote manage $5 billion, but it's not like they're managing $100 billion, right? So you really have one guy that's making all the decisions, the final buy or sell. For him to be convinced because of her research, and for that to result in like a $200-300 million paper gain that they have. I don't know if they sold any. We'll find out in the next 13G, 13F that comes out. That's a big deal, bro. So it was really cool just to pick her brain because I was like, how does that feel, dude? Like, you're responsible. She was trying to downplay it and be humble, but I was like, no, you're responsible for like a couple $100 million of profits, not realized yet, but like still. And it was just so interesting to listen to kind of how, you know, that dynamic works out. Reddit right here. Is that green? Wow. Why is Reddit up 7%? Wasn't this at 147 this morning? Yeah, this was at 149 this morning. What Reddit headline just pumped that bad boy up? You guys are saying Figma in 1 minute. All right, I got it open. Let's see if they have any coverage on this.
Stronger. And this is why, in part, it's taking so long, right, to open, trying to get some indications here. But looks like there's plenty of demand. This is one that priced at 33.
33, so it's going to be up.
They're saying it's 90 now, bro.
Total outstanding shares, somewhere around 487 million is what we're working with. So you can do the math there. I mean, more than a $45 billion market value, at least at 90. So.
And just to put it in perspective, it sold to Adobe for $20 billion back in 2023.
2022, September 2022.
Didn't go through because of regulatory issues.
Yep.
2023. Meantime, it's jobs day tomorrow, so big catalyst week continues, and the market is rallying. Now I'll send it over to Frank Holland and the halftime report.
Thank you, Sarah and David. Welcome to the Halftime Report. I am Frank Holland in for the judge, Scott Wapner. The record is front and center as tech earnings drive stocks.
Okay, so Figma, it should be happening like in the next minute, right? It should be happening in the next minute. We're all going to triple our 1 shares, bro. We're all going to, dude, we can buy a steak with the tripling of our Figma shares today. Paul says, I requested 300. I got 7. Dude, at least you got 7, bro. Most of us got 1. Like, at least they give you 7 of those shares. Goodness, bro. Yeah, I'm not going to buy it, guys. I'm not buying at all. It'll be fun to see what happens, but I'm not chasing this. But I am curious to see what happens. I am curious to see. Yeah, we can buy McDonald's. Yeah, exactly. We can get some McDonald's. Dude, I'm telling you guys, medium well is the answer to life. Like, I tried medium rare a couple weeks ago. Last night, I went back to my roots. Such good steak at medium well. Such good steak with medium well. It's the best way to do it. You guys are saying it looks medium rare, but the thing is, like, actual medium rare would be way more pink than that. So the fact that it is maybe a little bit rare, but I told them to do a medium well, like, protects it from getting super rare, because sometimes medium rare ends up being too rare. And I think medium well is the answer. I'm sorry. I just think it's the answer. Average price on Grab is now $537. My options average price is $450, but my shares that are basically in that $535 range. Okay, Figma, where are you? Are we going public? It's 12 p.m. It is time. Is this thing going to do it today or no? We got to see. We got to see. If it is, it's going to happen soon. If not, it might be taking some time. Dude, if they're still pricing it, then yeah, they're too busy raising the price, right? Yeah. All right, let's listen to Josh Brown on Meta and Microsoft, and then we'll try to see whenever Figma can go live.
Of doing this, and every one of us every morning should wake up and say, thank God for the AI CapEx story, because it is literally the only story in town. We learned this week that GDP growth in the first half of this year is only 1.5%. Not terrible, but last year at this time it was 2.5%. And then when you look at the components of what's happening in GDP, there are tariff impacts. Those impacts are not positive, FYI, if you weren't sure. But the amount of spending on IT is just so through the roof that it's overshadowing everything. And last night is such a great case in point. You look at the numbers from Meta, you look at the numbers from Microsoft, and then you look at the commentary from management, and it's like these companies are living in their own world, given what's needed in this cycle. Number one, they're executing, but number two, the demand just seems endless. I pulled out a couple of things that the desk can discuss that I thought were really notable. On Microsoft, cloud was up 23%. Unbelievable. At this stage in the game, to still be putting up numbers like that. Azure revenue growth was 34% higher than the same quarter last year. Copilot apps have now surpassed 100 million monthly active users. Microsoft says over 800 million monthly active users utilizing their AI across all of the various products. These numbers are obviously absurd. It's the fastest rate of growth for anything that they've launched on the enterprise side. Even LinkedIn had 9% revenue increase. And then the guide for CapEx. They're now guiding to they're now guiding to a number almost 40% of revenue for next year, just in pure capex. And to put that in perspective, it's like a double or a triple over a couple of years ago, depending on when you want to put the starting point. So when you're seeing something like that from the second largest market cap in the S&P 500, and you're seeing the resulting move after the close, and we could do META later. And then you look at everything else that's happening with all different mainstream related stocks, many of which are hitting 52-week lows. It's just incredible how stark the difference is between companies involved in AI capex and companies that aren't.
All right, why don't we continue talking about macro?
All right, folks, I think Figma is going to take more time. If it doesn't go public now, then we will cover it on the close. But yeah, I mean, it looks like they're busy raising the price on this, dude. They have no idea how to price this. There's way too much demand. And so there's going to take time to see that going public. But after hours, we had a lot of stuff to talk about. After hours, we had a lot of stuff to talk about. And so we'll keep going from there. Yeah, 12:50. All right. So we'll cover it on the close. Let's end the stream with this. I got this video sent to me today by someone, and I kind of couldn't believe it given the history I have with this company and the history some of you guys have with this company, at least in an indirect way. Let's just say, you know, sometimes retail understands the market better than institutions. I was talking to that woman from Altimeter yesterday, and she told me that it's very hard for institutions to invest in Palantir because they don't get it. They didn't understand it. Even she was like, you know, we tried to look at it, but like it's such a complex business, we couldn't understand it. And it was so funny when she said that, because I was like, I was making a video every single day. Arnie was putting out a Substack article every other day, right? Like this retail community, we got so obsessed with it for 2 years for us to be able to understand Palantir. And to an extent, we still don't understand it, but we have a much better understanding since then. And we've done very well because of sharing that due diligence. A lot of the institutions didn't feel like doing that, and so they ended up going with Snowflake. Ladies and gentlemen, this is what Snowflake posted today. This is the stock we could have been in if we listened to the toots when Palantir was 6. I'll just play the video because I think it kind of explains itself.
What are they doing?
Trying to be an influencer? Thank me later. I don't even know what to say, dude. I woke up. That was the first thing I saw this morning. This is a software company. This is a B2B AI SaaS enterprise play. I saw that today and I was like, are they trying to be Duolingo? You know, because Duolingo can work with that. And Duolingo has done stuff even more cringe than that, and it's worked. But Snowflake's not supposed to. Snowflake's supposed to be a sophisticated software company that all of Wall Street at freaking $250 at the IPO says was the next big thing. Palantir was supposed to be the cringe company that no one cares about. Sometimes retail can get it right. So yeah, I wanted to share that just to let everyone know, again, given the discussions I've had with some of these institutional investors over the past couple of days, they have a lot of respect for retail. Let me say that. I mean, she was naming Oscar and Lemonade. I mean, they're all on Twitter, bro. They're reading all of our shit. She was like, why do people like Oscar? Why do people like Lemonade? What do people think about Rocket Lab? And then she was like, why about Open Door? I was like, I can't explain Open Door. I don't know. I don't even want to associate retail with Open Door, even though there is a segment of retail associated with it. But on Oscar and Lemonade, I tried explaining kind of some of the thesis that I understand. But they are fascinated with these online communities coming together and forming a thesis and then producing due diligence on that thesis every single day. So, you know, it's a lot of respect that the institutions are starting to have for retail, and yeah, it's been working out. So, Hopefully it continues to work out, but we've got to see momentum continue. I am a little worried about the macro right now, given how hawkish J-Pow is. Not worried about the market, just worried about short-term momentum to the downside, which feels like it is possible. I'm not selling anything. A lot of people have asked, are you selling? Nope, not selling Grab, not selling Palantir, not selling Hood. I have covered calls. I guess that's my only hedge, but I'm not buying puts, and I'm definitely not selling NVIDIA, bro. I mean, like, it's very hard to see Meta and Microsoft and think anything worth selling is meaningful. So even in the midst of any volatility, I don't think we're going to see any massive selling. You got a statement from the Mexican president. We have an agreement reached with Trump safeguards the USMCA, which will have the best deal possible. Investing in Mexico is the best option strategy. So I still think they will have the 90-day pause, even though the Mexican president says they're working closer to a deal. But it looks like that 90-day tariff pause. But the good thing about the 90-day tariff pause is we should be able to get a deal with Mexico within 90 days, right? So the fact that they're making some coverage on USMCA makes sense. Palantir right here, 159, NVIDIA 180, Tesla 312, NVIDIA almost 181, and then Hoodie 106, Grab 502, Google 193, SoFi 2321, and then the S&P still up 0.5% today. It's not at all-time highs, but not a bad day. Meta and Microsoft are really maintaining momentum for the S&P. All right, Figma looks like they're going public in an hour. You guys will have to see when it goes public. Again, I just kind of got to get out of here, but I'll be back at 3:45 for market close. We'll cover everything. We're not going to listen to any earnings calls. We got a lot of companies. We'll cover Figma, and then Steve will join, and we'll talk the macro with him as well. One last thing I'll say as we end out the show today. So again, I got to meet Derek last night. We've been talking for the past year and a half, but we got to meet in person, which was super fun. So it was great to have a conversation with him. For those that don't know Derek, he is someone who's been watching the channel for years. He bought a lot of Palantir when it was low, watched a lot of my videos, and he gave me an opportunity to invest in Figure, which is the robotics company we saw back at the $2 billion valuation at Series B. And it was kind of his mantra of just pay it forward, right? He's very successful. He's a billionaire, right? He's done very well in life. He has a new startup that he's working on. And, you know, like, why would you give a random person a chance? Is because, you know, sometimes when you're a good person and you see potential in someone, you want to bolster that potential. And he's never asked me for anything in exchange ever, like ever. You know, it's just purely unconditional kind of, hey, you know, maybe we can expand kind of what you're doing here, and just wanted to give back. Especially, you know, when you get that rich in life, I think you start caring about giving back to the youth, and purpose is one of the biggest things he is, you know, caring about at this stage of his life. So the reason I bring him up is because he said something last night that I want to tell you guys about. I've never heard this before, but I heard it and I was like, this is one of those things I'm going to remember for the rest of my life. And I think it's relevant to all of us as investors. He said there's two ways to make money in life. Or sorry, two ways to make wealth, not money, two ways to make wealth in life. Never heard this before. Some of you guys might have heard it, but I've never heard it. The two ways to get wealthy in life. Number one, you inherit it. Or number two, you gamble. And that stuck with me last night. Number one, you inherit it. Either your parents are rich, your parents' are rich, you grew up and you're Donald Trump's granddaughter or whatever, right? You just have a lot of money in the family. You grew up, you're some Saudi prince. The money's in there. Or number two is you gamble. And the reason the word gamble is so important here is because you can make money working a 9 to 5, you can make money on a salary, but this is about wealth. And for wealth, you've got to gamble. Now, gamble does not mean go to Vegas. Gamble means you have to take a risk. You have to take a bet. Vesting at Palantir at 6 was a gamble. It might have been a sophisticated gamble based on whatever things I was looking at, but it was a gamble. Starting your own company, starting your own business, building a YouTube channel, you got to take a risk. You got to gamble. You got to see, can you actually do it? Can you go out into the world and build something of value? And so it really stuck with me last night because all of us, I think, are trying to be wealthy, right? And wealth objectively cannot just come from a salary because you are exchanging your time for money. So you have to be able to build assets. You have to be able to build equity inside of assets, which is the whole reason we invest, right? Because we invest inside of assets to be able to further the appreciation of those assets so that we have an ownership stake. And you've got to gamble when you're investing in these assets. And when I mean gamble, I don't mean in a negative sense. I mean, you've got to take a risk on Robinhood or a Palantir or Tesla, NVIDIA, AMD, Google, SoFi, Grab, all of this stuff. And the more asymmetric the risk, the more asymmetric the gamble, the greater chance you have at being wealthy. So yeah, you can't get rich without much risk was kind of his point. And, he's filled with a lot of life lessons, a lot of gems. Again, this guy's had 5 exits, multi-billion-dollar exits. He's, sold companies to major conglomerates in Japan. He is a one-of-a-kind person, and he's a good human being in the face of being that wealthy. He'll talk to anybody. He was talking to the valet last night as I pulled up from my Uber, and they were having a conversation about investing, right? It's like he never I've never gotten the impression from him, which is very rare for people that are very wealthy, that he is above you or that he is better than you because he's been more successful. It's just, he's another human being. And he should be able to be at the Miami meetup. So I think a lot of you guys will get to meet him, and you guys are going to love him because dude, he can talk to anybody about anything. And he loves talking. He's a natural extrovert. So he's introverted, but he's also very extroverted if you give him an opportunity to talk. And so hopefully those that are coming to Miami, you guys will get to meet him. And he's a very big blessing in my life. And some people always try to search for a mentor. I've never really done that. I think the best mentor-mentee relationships naturally happen organically. VVV is one of Derek's best friends. He might be at Miami. I don't know if he's going to make it, but Derek should be able to make it, hopefully. But it's been an organic mentor-mentee relationship. And quite frankly, I think the reason it works is also because I'm so receptive to learn, because I have not built many companies and built some billion-dollar enterprise, but I want to learn. And when someone's really willing to soak up the information and the other person actually wants to give it to the next generation so that one day, if I do what he's done, I can pass it on to someone else, that is kind of the cycle of paying it forward going into the long term. So super, super awesome, guys. Speaking of the Miami meetup, here is the form for Miami. So here's what we're doing on the Miami meetup. Let me be very specific about what's going on. So we had 500 people sign up, okay? 500 people is impossible. We have a max capacity of 250. So what I did to the 500 people that signed up originally is you have to send a $20 deposit via Venmo or PayPal. You will get the $20 back after the Miami meetup. I promise. I'm not trying to take the money. I'm not trying to spend the money. I don't need the money. It's just a way to differentiate the people that are serious and the people that are not. Because if you actually send $20, I know you're serious, right? Because I can't have 500 people show up and then, you don't want to say people can't come in, right? When there's 500 people that just show up. But 250 is reasonable. And we've already had about half of the 250 spots get filled up. So if you are interested in the Miami meetup, there's the form right there. Sign up. I will send another email tonight for all the people that sign up on the instructions. It's very quick. All you have to do is send me your full name with a Venmo or PayPal of $20. You will get the money back at the end of August. I just need some type of confirmation because otherwise I'm just, throwing a shot in the dark on who's actually going to show up. And if there's too many people, it's just going to get too crowded. So we have about 125 spots that got filled up in the past couple of days. We have 125 left. So if you want to make it, you can make it. Also, you do not have to send the $20 if you bought your flight already. So a lot of people, they emailed me their flight ticket. Just email me your flight ticket, amit@dailypalantir.com. And then you don't have to send the $20 just because if you already bought a flight, then I know you're definitely coming. And then, you guys will get the money back at the end of at the end of August when the event is over. So if you are interested, again, you can sign up today. I will send a new email with the instructions. Should be pretty quick. You'll get a confirmation email in a couple of days once I get your deposit. And then we'll go from there. In terms of the event, I talked to the bar owner. It's a new bar that opened up in March. Really good bar. Saw a lot of videos in it. There's a restaurant component towards it as well. It is outside, but it's also inside. So there's ACs and there's like fans and stuff. So I don't think, hopefully it's not going to be too crazy in Miami. And the drinks are also reasonably priced. The drinks are like $16 on average, which for Miami is pretty damn good. So if you're coming, I know most people will be drinking. That's kind of why they're giving us the place for free, because they expect people to buy drinks. There's no minimum on how many drinks you have to buy. But the point is, if you're there, most people will buy drinks and it should be good business for them. And they're giving us the space for free. So it'll be 5 to 11 on Saturday. All the details on the venue and location will be given to you after the deposit. Again, you will get the money back. I just need a way to make sure that you're actually coming. And I think if you send $20, that's a pretty easy way to know that you're like legit showing up. And it's a max capacity of 250 people. Now, 250 is going to be a lot, bro. 250 is going to be a lot because the most we've done is 170. And 170 in Toronto was crazy. So right now we're at 125. I don't know if we'll fill up the full 250, but we have space for it. If we do, it is going to be wild because that's a lot of people, but it should be really fun. It should be really fun. Again, you will get the details on the venue and the exact location if you sign up. And then I'll send an email and we'll we'll keep coordinating from there. Yes, I will not rug pull your $20 Venmos and buy a meme coin. I will not. Thankfully, you guys trust me enough that no one has questioned about the $20. No, I didn't get any emails saying, is this a scam? Are you trying to take my 20? Everyone was like, all right, here's the $20. So thankfully, we built up enough trust that you guys know I'm not trying to take the money, but I really need it because I could say $1, but then like anyone can send $1, right? But if you send $20, it's kind of real. I'm not saying $100, but like $20 is reasonable. Okay, you're showing up if you send $20. Like $20 is a reasonable amount of money to know that. Okay, I can for sure put your name on the list, and then there will be a list in the meetup. So if you come through, there is going to be a list, and your name's got to be on the list, right? So and your name will be on the list based on the $20 Venmo deposit. So it just makes it safer to know who's coming, and it also confirms that like we have a confirmed list, and there's not a lot of people that show up that aren't going to be there. So there you go. That's what we got. All scammers say this. Be careful, guys. Dude, what if it's Firefly? What if it's Firefly 2.0? What if that happens? All right, that's it. I'll be back on I'm not streaming the meetup, but we will have a video person there, take a lot of photos and all that stuff. And yeah, it should be fun. It should be really fun. It'll be a good way to end out August. Hopefully the market doesn't tank until then. I mean, August weaknesses, whatever. Maybe the market kind of tanks and recovers, but regardless, I think people will enjoy. It should be a fun time. It should be a really fun time. And it should be good. So what did I say? Fire Festival, right? What did I say? Dude, yesterday I was listening back to the stream and I spelled jeans, Geans. And I saw the chat afterwards and you guys were saying, dude, that's a J. And I just I guess I didn't see the comments when I was talking about the Sydney Sweeney stuff. And I was like, oh shit. I don't know how to talk. I don't know how to spell. I don't know how to speak. I don't know anything. By the way, Piper Sandler just raised Robinhood from 110 to 120, and Needham just raised Robinhood from 71 to 120. There you go. The 120s are coming. I mean, I'm thinking 120 as well. So the analysts upgrading it to 120, and then we had Devin Ryan from JMP upgrade them to 130 today. So there you go. Communications consultant. Dude, that's what makes it so funny. Like I literally built my post-college revenue streams off being as Chad says, communication consultant. People literally paid me to teach their kids how to public speak and debate. And I had some executives pay me for like these random one-off events that they had to do public speaking at. And your boy can't talk. But the time is always currently right now. I don't know what movie that's from. I don't know what movie. I have no idea. Like you think there's no way I could say what movie is that from. That's that. You're not going to get that one out of me. I have no idea what movie that is from. But whatever movie it is, I probably have not watched it. Father of the Bride. What the heck is Father of the Bride? 1991. Who's Martin Short? Who's Diane Keaton? I've heard of Steve Martin. I'm not going to say I don't know who Steve Martin is, but I don't know who the other people are. Father of the Bride. Huh. 6.6 out of 10 on IMDb. Kimberly Williams Paisley, Kieran Culkin, George Newbern. I'll ask Steve about it today. I'll ask Steve about it. It's an American classic. Why is it only a 6 out of 10 on IMDb then? I would imagine American classic is better than a 6 out of 10. I mean, that's a bit low for an American classic. I mean, I don't know. Have you never watched the show before 2010? Because of people like, dude, I saw this chart yesterday. I didn't save it on Twitter, but I saw this chart of Nolan's movies. And someone had like Interstellar at a 73% Rotten Tomatoes. It was all the Rotten Tomatoes. Dark Knight was at 94%. And I was like, how is Interstellar 73% on Rotten Tomatoes? That should be like a 97%. So yeah, maybe it is people like me sometimes that give these stupid ratings to these movies because it's like, what? I was like, how does that 7 out of 10? That's ridiculous. So
There you go. All right, I'm out. I got to dip. We'll be back on the market close. I know Figma's going public in 20 minutes, but guys, I do got to go. I got like actually 2 hours of sleep last night because I came home late and then I started posting tweets and looking through Grab's earnings and stuff. And I got to finish a bunch more stuff, but we'll have a very long stream again today. I mean, this is earnings season. We're getting busy, but market close, we'll have Steve, Apple, Amazon, MicroStrategy, Coinbase. We got a lot of stuff to discuss. And so we'll keep going from there. Again, appreciate everybody on the support. Chad, by the way, screenshotted the currently right now as soon as it happened. It was pretty cool, dude. I'm not going to lie. It was a pretty cool moment. I'm happy I kept it as a surprise. Chad ratioed Vlad by screenshotting the currently right now. So that was pretty cool. And yeah, dude, it was a game time decision. It really was a game time decision to do the CRN. But like literally on my, do I even have the Google Doc? On my Google Doc, I was typing up my question and like I typed up currently right now in it because I was like, this would be fun to say. Oh, I have it. I have it. Dude, look at this. I have it. Look at this. This is it. This proves that I wrote it down right before. Vlad, Jason, congrats on a great quarter. Currently right now. And then there's the question. There's the question, dude. I had to do it. Yeah, Vlad's reaction was really, yeah, he was like, as soon as they said finance content creator amid, he you guys screenshotted, he was smiling. And dude, Vlad was awesome, man. He was after the call, like when we all just got to sit and talk, he's a super chill guy, bro. Like he was being a Chad. He was being a bro, you know? He was being a bro at like, he was like, you know, on the thing, he's so formal, and even then he's very informal in the earnings call, right? The way he smiles and talks and says nice to see you and all this stuff, right? Like he's very relaxed, but after he gets very relaxed. And so I asked him a bunch of questions. I was like, what does it feel like? $100 billion market cap. I was like, what was the Invest America thing like? He was like, dude, Trump. He started imitating Trump. He's like, Vlad, you're a good guy, Vlad. You're an awesome guy. And I was dying, bro. It was hilarious. It was hilarious. And then he was just talking about, you know, how much he thinks there is room to grow. And I was like, do you feel the pressure and every day? And he's like, dude, honestly, like, I just think we're hitting our stride. He was like, 2022, like everyone hated me. There was a funny moment. He was like, all the media in 2022 was calling me the worst person, saying I'm a horrible person. I was like, yeah, dude, they were telling you to kill yourself. They were telling me to kill myself because I was defending you. And he started laughing. He was like, yeah, dude, it was bad. It's like people did not like me. And he's like, over the past couple of years, like things have changed. And I think he's going to be on Charles Payne's show today, Fox Business. Charles Payne, he was a big advocate of GameStop. And I'm not saying he doesn't like Vlad, but he's definitely not a fan of Vlad the way that I am. And so I think on that show today, he's going to try to butter up Mr. Charles Payne and hopefully get him on his good side again. But like, yeah, dude, he was just being very natural and relaxed. And you could tell he knew they crushed it. He didn't give a shit about the stock. He was just like, you know, you could tell he knew they crushed it. It was kind of like when I met Karp for the first time after Q1 2024 earnings and the stock fell 20%. It was 20%. Yeah, 25 to 20. And Karp he just told me, he was like, dude, we crushed it. I don't care what anyone says. We crushed it. So that was kind of the energy Vlad had. And the entire team, dude, their investor relations were awesome. Got to see Jason, CFO, the crypto head, Johan. I mean, it was pretty awesome. So it was dope. Wow, Figma now at 100 to 105. This is why this thing can't go public, because they keep raising the price, dude. Yeah, still not live yet. It's still not live. There's no way Trump is live right now, bro. You guys are not going to make me stay with Trump being live, bro. There's no way. No freaking way this guy's live. Why would he be live? No, he's not live. You guys are trolling, trying to get me to stay. He's not live. He might be live soon, though, because I think he's doing some executive order stuff later today. Figma does design for companies. They do design for companies. They're a very profitable company. They're growing fast, and that's why the street's been waiting for this deal to happen for a while. So that's why this IPO is very hyped. All right, folks, that's it. I got to get out of here. But again, the point I was trying to make before I started getting into all these different directions is I'm very, 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 very grateful for all you guys. I mean, it was more like a community win with that currently right now more than anything. And it was kind of me telling you guys how much I love you guys by making sure I said that, because only you guys knew what that meant. No one else knew what that meant. Also, the reason Tanner and Roy couldn't get their questioning, guys, is because I don't know if they said this already,
they forgot to press a couple buttons. It wasn't Robinhood's fault. They forgot to press a couple buttons. There's a *11 that you have to press when you get into the queue, and they just forgot to do it. And so, it sucks, but I was talking to the head of the investor relations. He was like, what happened? He was like, I saw them in the queue, but we couldn't bring them up because they didn't press the freaking buttons. I was like, shit, man. Like, so it's just unfortunate that they just like missed that. By the way, Tanner and Roy got invited. Tanner and Roy got invited to New York. Everyone got invited. They just chose not to come. Roy, personal reasons. He didn't want to leave Texas. And then Tanner, he had whatever else going on. So all of us, it wasn't like they picked me. Every analyst got invited. And so, Tanner and Roy just didn't want to make the trip. I live an hour away. So I was like, all right, I'm going to come through. But yeah, it was just a mishap they had on the dialing of the audio queue. And that's why they couldn't ask a question. So yeah, that's it. Again, means the world. Saying currently right now is just me telling you guys, I love you guys. And I knew you guys would get it, even though no one else would get it. I made sure to have an accentuation of my voice on the currently right now to really make sure that you guys knew that I knew that you knew. And it was a fun moment. It was a special moment. And it just means the world, dude. It means the world. It's, I'm growing up. I'm getting older. I'm going to be moving out soon to be on my own. I got a lot of other life stuff that I'm, dealing with now, and career is evolving, life's evolving. So to be able to be on the show, guys, community together, it's very special. It's really, really, really special. And means the world to be able to get this opportunity. For those that didn't see it, I'll show it one more time, and then we'll end out this stream. I'll also put the Miami meetup in the chat again. For those that didn't get the form, I'll put that form in the chat so you guys can sign up.
Charter, especially as we get, we can.
Let's take a question from one of our finance content creators, Amit from Amit is Investing.
All right.
Vlad, Jason.
Finance content creator. Good to see you.
Congrats on a great quarter, and congrats on innovating on the live event experience for earnings. Currently, right now, you guys have about 3.5 million gold subscribers, which seems to be the least. We had to do it, bro. We had to do it. In the peripheral vision of my eye, I could see the chat going crazy. This was Vlad when they announced my name, so it was fun, dude. It was fun. He really loves engaging with retail, and we just had to do it. We had to do it. It just had to happen at that moment. And congrats on innovating. One of the funny things in the chat is there was like a couple of you that said if Amit starts or implements currently right now, it's almost like some of you guys knew I was going to do it. Not a lot of you, but I saw some of the comments that were like, yo, imagine Amit says currently right now, or imagine Amit slips in a CRN. And I was like, damn, they really, like, some of you guys predicted I would do it. And you guys knew we were in sync because I did it. The live event experience for earnings. Currently, right now, you guys have about 3.5 million gold subscribers, which seems to be the least cyclical part of the business because it's reoccurring SaaS revenues on that yearly subscription. More broadly, how are you guys thinking of protecting the business from cyclicality in the face of market volatility, rate cuts leading to a loss of net interest income, and anything else that could keep that type of growth going as sustainable as possible, given one of the biggest criticisms I've heard is that Robinhood is a very cyclical business? Yeah, I mean, all right, there you go. I think their answer was really good as well. It's a little bit of a long answer, so I will send the link in the chat. The timestamp is 1 hour, 38 minutes, and 2 seconds. I'll put the timestamp right there as well for anyone who wants that exact answer. For those that didn't hear it, just go to 1 hour and 38 minutes. 1 hour and 38 minutes. It is a very good answer, and it is an answer that I already kind of knew what they would say, but I wanted some updated thoughts because now the big bear thesis I'm getting is, well, Robinhood's up there, but it's cyclical, and I'm like, yeah, but I think they've developed beyond that, and I think they can survive cyclicality. Devin Ryan talked about it a lot today as well. So if anyone wants to listen to the full answer, I think it was a good one. And yeah, it was a fun moment. It was a fun moment. The timestamp is currently right now. There you go. Dude, the fact that I was wearing this watch too, no one asked about the watch, but no one saw that the time is not there. I kind of like this, bro. It's kind of a little bit of a conversation starter. You know, if someone looks at your watch and they don't see the time and they're like, hey, why is your watch broken? And I'm like, no, my watch is not broken. Your mindset is broken because the time is always currently right now. I love you guys. Thank you so much. I will see you guys on the market close at 3:45. Bye, everybody. Have a good one.